Good morning, students. Welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. I hope my PPT is visible to all of you. So happy Raksha Bandhan to everyone. Today is Raksha Bandhan. It's a festival of brothers and sisters. So good morning, Priya. Good morning, Sanjay. Good morning, Ankit, Naman, Udandam, Meruna, Saminathan, Saurav. Good morning, everyone. Yes. So friends, today is the second lecture on Ind AS 115, revenue from contracts with the customer. In the first 5 minutes, I will revise what we have discussed in the last class, and then I'll move to the next part of the session. So friends, we discussed that this standard is applicable on the revenue. Revenue means which is earned from the ordinary activity of the entity. So this standard is applicable on the revenue from operations, on the revenue which the entities are earning from the customers, right? So this standard is applicable to all the revenues except leases, except insurance contract, except financial instruments, and except non-monetary exchanges between the entities, right? And the transaction which is not arising from a contract with the customer, for example, dividend, interest, these kind of transactions you're not earning out of a contract with the customers, okay? And hence, these are not in the scope of Ind AS 115. Then we have discussed 5-step model, right? And when I talk about 5-step model, we discussed that contract has to be identified as a contract, means that has to be a contract with the customer. Identification of contract with the customer. And contract could be written, could be oral, could be express, could be implied also. Contract can be as per the industry practice. Like in case of banking industry, there are oral contract also where it is recorded on the IVR, recorded lines, okay? Friends, then we discussed in identification of contract with the customers, we have discussed that parties should approve that contract, rights should be identifiable, payment terms should be determinable and identifiable. It has a commercial meaning, right? And the entity is probable to collect the consideration. The entity believes that the entity will be able to collect the consideration. If the entity is believing that they are only able to collect the consideration to an extent. To that extent, the revenue has to be recognized. To that extent, revenue has to be recognized. Okay. Then we have done some examples on this, some illustration as well. Then we also discussed contract term. What is a contract term or contracted unit? The contracted term or contracted units are those period or those units which are contracted, which are mandatory, which are obligated, and the parties cannot withdraw, the parties cannot terminate, right? So there are severe penalties for termination. Okay. So then we discussed an example of ZIM, we discussed CCTV camera example, okay? Then we discussed when the contracts can be combined or when a contract will be treated as a single contract, separate contract. So we discussed that if the contract is happening with the same party, same customer, or with the related parties of the customer at the same time or nearly the same time, right? If that is the case, then you need to check whether it is a separate contract or two or more contracts can be combined. If the contract is happening at the same time or nearly the same time with the same customer, then you have to check 3 conditions. And if one condition out of 3 conditions will met, then the contracts can be combined and it has to be looked as a single contract, right? So it is whether contracts are negotiated as a single commercial package, means when you are entering into another contract, you are also taking the consideration of the last contract. Okay. You are also taking the cognizance of the last contract. You remember, I have taken the example of training session where there are 2 kind of examples. One example was 10 classes was delivered and the management needs 5 more classes, 5 more training sessions. And at one place, it was like the additional 5 training session has to be delivered as per the standalone selling price of those 5 training sessions. The second is the management is saying, no, you have to see these five, you don't have to see these 5 sessions in isolation. You have to see this contract as a 15 classes contract, right? As a bulk contract. So in that case, the contract can be combined because it is negotiated as a single package. Consideration in one contract depends on the other contract. Same if you are negotiating as a single commercial package, and goods or services are single performance obligation. You remember we did one example from ICAI study material where the company was delivering a software, and if that software has to be beneficial for the customer, there needs some customization, right? Some customization was required. So till the time this entity will not do the customization for the customer will not get benefited from the software, and hence that software and customization of software, while two different contract, but it is a single performance obligation. It is a single performance obligation, right? Ind AS 115 is a customer centric standard. If somebody will ask you what is the biggest difference between accounting standard 9 and Ind AS 115, the biggest difference between Ind AS 115 and AS 9 is accounting standard 9 in accounting standard was from the management perspective. Accounting standard 9 was the entity specific standard, but Ind AS 115 is a customer specific standard. When I say customer specific standard, so Ind AS 115 says that the performance obligation will be satisfied, the performance obligation will be considered, right? If there is a benefit to the customer, if the customer will get benefited, then only it is said that the performance obligation of the entity is delivered, is satisfied, right? So if that entity, and this example to be if the entity has transferred a software, but that software cannot be used by the customer without any customization. So if till the time customization will not happen, whether the customer will get benefited?
No, sir.
No, customer will not get benefited. So while first contract was supply of software, the second contract was consultancy services for customization, right? So in that case, while two different contracts, but both the contracts are considered as a single contract, one contract. Why? Because total supply of software and consultancy for customization, it is not two performance obligation, it is one performance obligation. What does it mean? It means, for example, the software costed, the price of the software is 10 lakh rupees, right? And the entity has supplied the software to the customer, and now entity has to provide the customization service, and customization service contract is for 5 lakh rupees. So my question is, for example, if the entity has supplied the software but not has given the customization service, so whether the entity will recognize the revenue for supply of software? Is it a separate performance obligation? Saminathan, what do you say? So Geet has answered. Geet is saying no. Saminathan, what is your view?
Sir, please repeat somebody entered my room. I would not concentrate.
Let me explain. So let's say a company has entered into a contract to supply the software. Okay. And the company has entered into the second contract with the customer to provide the consultancy for customization service, so that the customer will be able to use the software. Otherwise, customer will not be able to use the software. So there are two contracts, one supply of software for 10 lakh rupees and consultancy for customization service for 5 lakh rupees. These are the two contracts. Okay. Now my question is, the entity has delivered the software. The entity has given the software to the customer, but the entity has not given the consultancy services for customization. Should entity recognize the revenue for supply of software?
No,
Whether
sir.
entity... Yes, why no?
No, sir. No, sir, because since this Ind AS 115 is a customer specific, the customer should get benefited out of this. Because having that software, there is no use unless otherwise it customized for the customer benefit. The customer will not get benefited out of it. So that this both are treated as a single performance obligation.
You are absolutely right. You are absolutely right. And Geet has also given the same answer. So you're absolutely right, Saminathan and Geet. So yes, only supplying a software is not giving any benefit to the customer, right? Till the time it is not getting customized as per the customer environment. And that is why both the obligation are combined obligation and it will be treated as a single performance obligation. And the customer and the entity will recognize the revenue only when the customization services will get completed. Okay. So entity will recognize the revenue of 10 plus 5, 15 lakh rupees. It will be considered as a single performance obligation. Very good. Right. So we talked about these aspects. Okay. And we talked about contract modification also, when there is a change in price of the contract, when there is a change in scope of the contract. So we discussed when the change in scope is in line with the standalone selling price, fair value, market price of the goods and services, then it will be treated as a separate contract. But when it is not in line with the market prices, it means what? It is depending on the last contract. It is negotiated as a single commercial package. So in that case, it will be considered as a revision in the existing contract. It will not be treated as a new contract. We have done this example, right? Yes. So friends, let's do some examples from ICAI study material and from my own source. Contract modification, example number 1. Manufacturer enters into an arrangement with a customer to sell 100 goods for currency unit 10,000. Means 100 rupees per goods. Okay, 100 rupees per unit price. The goods are distinct. What is meant by distinct? Distinct means
Different from each other. Each goods are different from each other.
Each goods are different from each other. This is a borosil glass. This is a borosil glass. And I have 6 glasses. Okay. So whether these 6 glasses are distinct or not.
Distinct, sir.
These 6 glasses are distinct. Okay. So one glass, I can drink water from one glass. So another glass can be used by Priya. Third can be used by Sanjay. Fourth can be used by Geet. Fifth can be used by Saminathan. Sixth can be used by Neha, right? So every glass has its own use, right? And separate parties at the same time can get the benefit from those different goods and services. Okay, those separate goods and services. So distinct means ऐसा नहीं कि ये 6 ग्लास तो सर एक जैसे हैं तो डिस्टिंक्ट नहीं है. Distinct means separate, different. Okay, so that they will be able to, if one glass will be broken, of course we can get the benefit from 5 glasses. It is not like one glass is broken then everything is broken. No. Okay, so goods are distinct, goods are different, and Geet is saying it can be identical but it is different. Yes, the goods are distinct and are transferred to the customer over a 6-month period. 6 months is the contract. The parties modify the contract in the 4th month. So 4th month में contract को modify किया to sell an additional 20 goods for currency unit 95 each. The original contract was 100 goods, 100 rupees each. Then in the 4th month they have added 20 goods at the rate of 95 each. The price of the additional goods represent the standalone selling price on the modification date, while the additional 20 goods have a price lower than the original price, right? But it is lower than the original price, but what? But it is on the market price. It is on the market value, fair value, standalone selling price. So whether we will treat this modification as a revision in the existing contract or as a separate contract?
Yes, it will be treated as a separate contract, sir, because it is a standalone selling price and also it's a distinct goods.
Yes, it will be considered as separate contract. Anusi, you are also saying the same thing?
Yes, the same thing.
Okay, okay. Yes, other one was also responding. I believe Saurabh or somebody else was also responding. Sanjay or Saurabh. Same answer?
Yes, sir.
Okay. Yes. So it is a separate contract. Why? Because the additional goods and services are delivered at the standalone selling price, market price, fair value. Okay. Yes. So friends, in this standard, lot of words will be used interchangeably. Okay. Standalone selling price means उस goods and services का अपना price. Okay. Market value. Okay. Fair value. Right. This is known as a standalone selling price. Very good. Now, friends, let's do this case study number 7, illustration number 7. Okay. An entity promises to sell 120 product to a customer for 1,20,000 rupees. So what is the price per product? 1,000 rupees. The products are transferred to the customer over a 6-month period. The entity transfer control of each product at a point in time. Okay. After the entity has transferred control of 60 products to the customer, the contract is modified to require the delivery of an additional 30 products. 60 products के बाद total 120 product थे, and 60 product के बाद, after 60 products, the contract is modified to require the delivery of an additional 30 products. The total quantity was 120. How much was delivered already? 60. So 60 क्वांटिटी के बाद ही इन्होंने बोल दिया कि मुझे 30 और चाहिए. मतलब टोटल कॉन्ट्रैक्ट कितनी क्वांटिटी का हो गया? रिवाइज कॉन्ट्रैक्ट
150.
150. Okay. A total of 150 identical products but distinct product. Right? Correct, Geet? This is what you were telling. The products are identical but different. Yes? Okay. To the customer at a price of 950 per product, right? Which is the standalone selling price of such additional product at the time of placing this additional order. Important line. The additional 30 products were not included in the initial contract. This is the revision in the contract, change in the scope. It is assumed that the additional products are contracted for a price that reflect the standalone selling price. Determine the accounting for modified contract.
Yes, sir. It's very simple, sir. In this case, it's a separate contract since it is identified as a standalone selling price of such additional product. Say example, in this case, 30 product. So that 30 into 950 will be the separate contract. That existing contract will be continue as a old one.
Okay, perfect. Very good. Absolutely right. But what happened if in this example, it was written that after delivering 60 products, there was an increase in the scope by 30 products and the additional 30 products are getting sold at 950 per product, but the market price of the 30 product are 1,000 rupees per product. Then
in that case that it is not in line with the market price, so that the existing contract to be modified and we have to calculate in the 120 into 1000 and also plus this we have to revise that price and we have to modify accordingly.
So yes, you are right. In that case, if it is not in line with the market price, the increased scope, the increased unit of goods and services, if it is not at market price, then you need to consider this entire contract as a single contract, combined contract, right? So revision in the existing contract, modification in the existing contract. Then what you will do? Then you will determine the total price of the revised contract. 120 multiplied by 1000 plus 30 multiplied by 950. It will give you total consideration of the revised contract. Then you will divide the total consideration by 150 product. You will get a unit price, a revised unit price of a product. Okay. But 60 product you have already transferred at 1000 rupees. You have already recognized a revenue of 60,000. So what you will do? You will do this adjustment in the next revenue recognition in the next period. Okay. So in that case, it will be treated as a revision in the existing contract, modification in the existing contract, not the creation of a new contract. Correct? Yes.
So
Yes, sir,
one quick question. So it's like when we say it's like the price is, price is not equal to the market price and getting influenced by the existing contract. Is that only decrease in the selling price is considered, or also the increase as well?
Is that?
Is that like, let's say for example, it's like in the previous example, the existing contract was for 1,000 and the current market price is 950. So if we are doing it for 950, then we consider it as a standalone price and it is not getting influenced. Or let's say it's like if it is reduced to 900 because they are the existing customers, so it got influenced by the existing contract, so the price is reduced. So what if that is increased, like 950 is the standalone price, and let's say we are selling that for the 1,000. So that means it is not getting influenced by the previous contract. So would that also be considered as a separate one? Like
Yes, that will also be considered as a separate contract. Exactly. Okay. Illustration number 8.
But that is not standing with the market price, like standalone price.
So you are saying
you
are saying the market price is, let's say, 950, okay, and we are selling at 1,000 rupees, correct?
Yeah.
So that is beyond market price, na? It means even this contract has not been negotiated as a single commercial package. This entity is charging more than the market price. It means it's a separate contract, and that higher price. So probably when this entity has sold 120 goods, it was at 1,000 rupees, right? At that time, let's say the market price was, let's say at that time also it was 900 rupees or 950 rupees, but the entity charging a premium because it wants to earn a more margin. Okay, so they sold at 1,000 rupees. Now the customer is demanding additional 30 units. So since market price has gone down, for example, it is 950 only, but still this entity wants to charge 1,000 or 1,050 because of scarcity in the market, because of, this customer is in urgent need. So entity wants to earn more money. So the only thing is when the entity is charging more, doesn't matter, it is in line, it is beyond market price. But again, the new goods and services, the new contract is not getting influenced with the existing contract, right? And that is why it cannot be considered as a combined contract. That is why it cannot be considered as a combined contract and as a single contract. Okay. So that's the key. But what happened? Instead of market price was 950, but the additional goods have been sold at, let's say, 900 or 850. Then
this is definitely influenced by the.
Then it has to be combined. It has.
Right?
Okay. So it can be sold beyond market price also. In that case, also it's a separate contract.
Okay. Thank you.
Illustration number 8. On 1st April 2001, KLC Limited enters into a contract with Mr. K. KLC Limited is a company and Mr. K is the customer. Who is Mr. K? Mr. K is the customer. Okay. A machine for 25 lakh. 2.5 million means 25 lakh. Machine for 25 lakh. Right. 1 year of maintenance services for 55,000 per month. 1 year of maintenance services for 55,000 rupees per month. Okay. So it is providing two services. It is providing two services. Machine 25 lakh, maintenance service 55,000 per month. So machine, when the entity will sell machine, So whether the machine revenue will be recognized at a point in time or over a period of time.
At in point in time, sir.
And this maintenance service, whether this revenue will be recognized at a point in time or over a period of time.
Over the
Over
period.
period.
Over the period, because it is a recurring continuous service over the period of time. Okay. On 1st October, 1st April के बाद 1st October, after 6 months, KLC Limited and Mr. K agrees to modify the contract to reduce the amount of services from 55,000 rupees per month to 45,000 rupees per month. So after how many period? After how many months? After 6 months, they have decided to reduce the monthly maintenance service price from 55,000 to 45,000 rupees per month. Determine the effect of change in the contract. Friends, in this case, whether there will be any change in the contract for machinery?
No, sir.
No, there won't be any change.
It has already been sold out. The revenue has been recognized. Now, coming to the maintenance service. Assuming the maintenance service has to be for a year, for 12 months. After 6 months, the price has been reduced after 6 months. Okay. So question number 1, whether the services which are provided up to 6 months and the services which are going to be provided after 6 months, whether those services are distinct services or not.
Yes, sir. It is a distinct service, sir.
It is a distinct service. It is a different service. The services which has already been provided earlier, right? Those services cannot be. So already those services have gone. That period has gone. Now the services which will occur, those will be the new services. These are identical but different, distinct. These are identical but different. Okay. Yes. So for example, a security guard who is providing the security service, if he has already provided the 6 months of security service, and now he will provide the additional 6 months of security service, and in the last 6 months of security service, no thief, no trespasser, right, has entered into the premise. उसने आपको 6 महीने ऑलरेडी सिक्योरिटी प्रोवाइड की, और इस 6 महीने में कोई भी चोर, कोई भी ट्रेसपासर उस प्रीमाइसेस में नहीं आया. Can you say that in the next 6 months that the trespasser or thief will not come? Probably it may come. So the point is, and the services which he has already provided and nobody has entered into the premise, nobody, right, without any valid reason has entered into the premise. So you cannot change the outcome of the last 6 months. Okay. So these services are different. Right? So you understood the meaning of distinct, because it is a very, 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 very important word in this standard, right? Yes. So the services are distinct. But this price has decreased. So earlier the entity has recognized the revenue of 25 lakh for machine. It has gone. Now the entity has recognized the revenue of maintenance for 55,000 per month. It is completed for 6 months. Now the entity has reduced 10,000 rupees per month. So what will happen now? Now the revenue has to be recognized subsequently for 45,000 rupees per month. So it is considered as a termination of the old contract and creation of a new contract, kind of. Okay. So revision in the contract, because old services will not be impacted. Okay. So friends, KLC will account for contract modification as if it were a termination of the existing contract and creation of a new contract. वो कैसे ट्रीट करेगा? जैसे पुराना कॉन्ट्रैक्ट खत्म हो गया, नया चालू हो गया, ऐसे ट्रीट करेगा. The consideration allocated to remaining performance obligation is for 2,70,000. What is the 2,70,000? 45,000 multiplied by 6, which is the sum of consideration promised by the customer, right? So basically, forget about these lines. So what is this? This is the next 6 months. 45,000 multiplied by 6. Okay. Is that clear?
Yes, sir.
Clear? Yes, now illustration number 9. This is important. This is the same which I have already covered. 10 session, 15 session, 5 sessions are at less price. Growth Limited enters into an arrangement with a customer for infrastructure outsourcing deal. Based on its experience, Growth Limited determines that customizing the infrastructure will take approximately 200 hours in total to complete the project and charges 150 rupees per hour. What is this? This is a construction contract. This is a construction contract. So, this entity determines that if they will customize the infra for a customer, it will take 200 hours. And what is the price? They are going to charge 150 per hour. After incurring 100 hours of time, the company and the customer agree to change an aspect of the project and increase the estimate hours by 50 hours. So what is the total hours now? What is the total hours now?
250 hours.
250 hours. Earlier it was 200 hours. What was the price per unit? 150 per hour. And now they have agreed to increase the estimate of labor hours by 50 hours at the rate of 100 rupees per hour. At the rate of 100 per hour. But this additional 50 hours is at 150 or 100? It is at 100. It is less than that price. Determine how contract modification will be accounted for as per Ind AS 115. Friends, the question is silent that whether this 50, the remaining 50 hour is at standalone selling price or not. But it's a labor rate. So practically and logically tell me, क्या labor rate बढ़ेगा या कम होगा? बढ़ना चाहिए या same होना चाहिए, right? So in this case, this is less than 150 rupees per hour. So in this case, will you treat this 50 hours as a separate contract or as an updation, amendment, or as an amendment, updation or modification in the existing contract?
Sir,
Modification in the existing contract.
yeah, I feel it is a modification of the existing contract because without that additional 50 hours, the particular job cannot be completed. If they left behind, the job will not be completed. So it will be treated as a modification of the existing contract.
Okay. What about
And sir,
others? Yes.
price is also not a standalone price. It is not like it is based on the previous one.
You are absolutely right. You're absolutely right. Yes. So considering that the remaining goods and services are not distinct, why it is not distinct? Because this remaining goods and services, this remaining services will complete the older services, right? Aapka, like Saminathan has told, and Anushi, you are also right. So there are two aspects in this contract. Number one, goods and services are not distinct. Goods and services are single goods and services because if, let's say, if you are getting a construction or renovation done for your house, okay, and you told that please construct a room for me, and the contractor has already put the bricks of the contractor has put the bricks for constructing the walls, okay, but the contractor has not completed the walls, right? Because you have given the contract for 200 hours and now it will take another 50 hours, okay, another 50 hours. So in this case, if the walls are not completed, whether it will be called as a room? Answer is no. 50 hours will be needed and those 50 hours will complete the work which was done in the first 200 hours, right? So in this case, the services are not distinct. The services are not distinct. For example, you have to complete Ind AS 115. You have to complete Ind AS 115. There are 5-step model. There are 5 classes. And if only after 2 classes, I'll stop teaching you Ind AS 115. Okay. So in this case, whether Ind AS 115 will be completed, whether you guys will get benefited.
No, sir. The purpose is not solved.
Answer is no. Number 2. So when after completing 2 classes, when I'll come to 3rd and 4th and 5th class, so of course, what I'm doing, so already whatever I have already taught you, whatever I have already discussed, right? These 3rd, 4th and 5th classes are also dependent on those 1st and 2nd classes. They will complement each other, right? These 3rd, 4th and 5th classes will be able to complete the 1st and 2nd class also, okay? Because a lot of concepts are combined. So friends, first of all, these goods and services are not distinct, because without these goods and services, the benefit will not be completed to the customer. But in the case of maintenance services, 6-month maintenance has already been provided. So 6 months period has gone. For that period, everything has been done. In the last 6 months, at 55,000 rupees per month of maintenance, whenever the machine has a problem, the vendor has corrected that, right? So that has gone. That is nothing to do with the next 6 months. In the next 6 months, when the problem will come, the mechanic will come. But in this case, goods and services are not distinct, and the price is also reduced for the additional product. And the question is silent about the standalone selling price. So you should consider that it is not on the standalone selling price. Okay. So जब भी अगर question silent है, तो आप assumption डाल देना. We have assumed that since the price has been reduced, we have assumed that it is not in line with the market price or standalone selling price. Okay. Yes. So initial contract amount is 200 multiplied by 150. Modification in the contract is 5,000. So total hour is 250. Total consideration is 35,000. What is my per unit rate? 35 divided by 250? 140. So revenue to be recognized, already completed 100 hours. Revenue to be recognized 14,000. But how much revenue has been recognized already?
15,000.
15,000. So there has to be adjustment in the revenue of 1,000 rupees. Okay. Clear? This
Okay,
is
not
clear?
retrospectively. It is a prospectively you will adjust.
Of course, it is a prospectively. Even in my example in the Excel file, which I have already covered, and one of the student has asked also, sir, what happened? What happens if this price has been reduced subsequently? You remember this classes example in the yesterday class?
Yes, sir.
Yes.
It's not the error. It's a estimation.
Yes. It's not an error, it's an estimation. It's a updation. It's a change in the circumstances. Okay. Yes.
So
Now,
what will be
friends,
the journal entry for this? Can you please help me out with that?
okay. Journal entry. So shall I use
Yes.
Excel file? She is asking, will you help me out for that? Why not? It's my obligation.
Thank you, sir.
Illustration number, what is the number? Illustration number 9. Okay. Illustration 9 of ICAI study material, right? Journal entries. Recognition of revenue on completion of 100 hours. Okay. What is the entry? Recognition of revenue. Debtors account debit. Assuming money has not been received, our first entry will be always debtors. Then we will debtors account debit to
Revenue.
To sale of services. Okay. Or to revenue from sale of services. To revenue from sale of services. Okay. So you can use any word. Even if you can use revenue, sales, okay, number will not be deducted. How much is the amount? Anusi, what is the amount? 100 hours multiplied by 150.
100 hours multiplied by 150, it will be 1,50,000.
15,000. 100 multiplied 150, 15,000. Okay.
50,000, yes,
Yeah.
sir.
So then 15,000. Now price has been modified. Okay. So contract has been modified, not price. Contract has been modified. And the revised price is how much, Anusi? Revised price? Yes?
Revised price will be 140.
140 per hour,
So
right?
total will be
Yes, 140 per hour revised price. So assuming, and let's assume, थोड़ा सा और तड़का डाल देते हैं इसमें. Bank account debit, and money has also been received, correct? Right, Anusi? Money has also been received. Bank account debit to debtors account. 15,000. Okay. So now, contract has been modified and the revised price is 140 per hour. So now what will you do? Will you refund the money?
No, sir.
no, we will adjust it in future.
We will adjust.
You will adjust in the subsequent billings, in the subsequent revenue, you will adjust. So what is the accounting entry? But this 1,000 rupees is an obligation towards customer, right? Because when you will do the next billing, what you will do? You will credit your customer, yes, because you have already, it is considered as an advance from customer. So what is the next entry? Since you have already recognized higher revenue, so revenue from sales of services debit, and what will be credited
to debtors account.
To debtors or advance from debtors. Okay, debtors account में negative balance पड़ा रहेगा. So when Anusi will go for audit, she will ask why it is a negative balance in debtor account. Then the management will explain that, madam, it is due to revision in the contract. It is due to revision in the contract, right? And this negative balance means advance from debtors, right?
Yes, sir.
Anushi, have I completed my performance obligation?
Thank you, sir. Thank you so much for it.
Okay, yes.
Thank you, sir.
Let's move on. So now we have entered into the step number 2, and we discussed a lot on step number 1. This step number 1, whatever explanations we have given, we have discussed in last 3-hour session and this 40-minute session. It will help you in the entire journey of revenue from contract with the customers. As of now, we as a student, we understand this 5-step model from 36,000 feet. मैंने आपको aerial view दिया था. You remember the aerial view in the last class? Where?
Yes, sir. Helicopter view.
Helicopter view, aerial view, helicopter view from 36,000 feet. I have told you that first you need to identify the contract with the customer, then you need to determine the performance obligation. And in my example of helicopter view, what was the performance obligation? It was air condition, stabilizer, installation service, and the free maintenance service for 2 years, right? And then I have also given you the third step, which is transaction price, determination of transaction price. The transaction price is a price of transaction. Transaction price is a price of transaction. Okay. So then I have told you that in that example, the transaction price was 50,000 rupees. And then once you got the transaction price, now you have to do the revenue recognition step by step, right? By the performance obligation. You remember we have covered 3 years in that example. The AC was sold on 15th March 2023, right?
Yes,
so
sir.
There was a 22-23 financial year. Then stabilizer and installation was in the month of May 23, so 23-24 financial year, and there was 24-25 financial year also. So you have recognized your revenue by whenever you are delivering the performance obligation, meeting the performance obligation, satisfying the performance obligation, you are recognizing your revenue. But how will you recognize? You only know 50,000 rupees of transaction price, and that 50,000 rupees of transaction price was not only for AC. क्या स्टेबलाइजर आपने फ्री में दिया है? तो अगर मैंने उस शॉप से, अगर मैंने उस दुकान से मैंने AC नहीं खरीदा, so can I go to that shop and ask for stabilizer free of cost? Because I will say that, listen, you are also selling free of cost stabilizer to Anushi. So please give it to me also. Then what that vendor will say, what that shopkeeper will say, he will say, listen, I have not given free of cost stabilizer to Anushi. She has purchased a package from me. She is not aware that I have charged for stabilizer also. Right? There was a lump sum deal. I told her, I will give you 4 things in 50,000 rupees. Right? But you haven't purchased anything from me. I will not give it to free of cost. You can also buy air condition from me. You can also pay 50,000 rupees. I'll give you free of cost stabilizer. So the question came, how will we recognize the revenue of performance obligation, multiple performance obligation? Then the step number 4 comes into picture, which says that not to worry. So what you have to do, you have to allocate the transaction price into the performance obligation. How to allocate? On the basis of, in the ratio of standalone selling price of those performance obligation. Is that right? Is that clear?
Yes, sir.
Yes, sir.
Okay, very good. So then the last step was recognition of revenue at a point in time or over a period of time, right? So since last 4 hours, we are using the word performance obligation. But have you understood this word performance obligation?
Yes, sir.
Performance obligation is an obligation of doing a performance towards a customer, so that the customer will get benefited from those goods and services. Let's say Saurav has given, I am a contractor. Saurav has given me a contract for construction of a house, right? Construction of a house. The entire contract he has given it to me. I have only constructed half of the house. I haven't constructed the remaining part of the house. So whether my performance obligation is completed?
No, sir.
I have only constructed rooms. I haven't constructed kitchen and washroom. Whether Saurav will be able to use that house?
No, sir.
No. So my performance obligation has not been completed. But can I say that, see Saurav, I have already completed the rooms, right? So my performance obligation has completed. So completion of room is like my performance obligation number 1. Completion of washroom is performance obligation number 2. So the point is whether the customer will be able to get the benefit out of that room only. Answer is no. Saurav's expectation is house, not only room. It is a complex contract which Saurav has given it to me. Saurav need a house. He don't need washroom, kitchen and room separately. He need a complete construction. He need a complete project, right? So this is a single performance obligation from the contractor perspective. Okay. So performance obligation. What is a performance obligation? Performance obligation is a promise, is an obligation, right, of a goods and services to the customer, which is a distinct goods or services or a series of distinct goods and services which are substantially identical and same and have the same pattern of transfer. Bookkeeping service. Accountant bookkeeping service देता है ना, या concurrent audit of bank. Have you seen the concurrent audit of bank?
Yes, sir. Even I have done it.
What is concurrent audit? Every month, the chartered accountant firm is going and audit the process or procedures of the bank or the accounts of the bank, right? Concurrent audit, continuous audit. So every month, ongoing audit, every month they are recognizing revenue, okay? And it is a series of distinct service, right? So for example, the RBI gives the contract for 1 year or 2 year. So every month, the pattern of the transfer is same. The services are identical, but it's a distinct service. It's a series of distinct service that they have to provide the service for every month. Every month accounts they will check. Okay. So friends, what is a performance obligation? It's a promise of delivering the goods and services which is distinct, which is different, which is separate. Okay. Either a goods and services or a series of goods and services. Like in case of security guard services, in case of bookkeeping services, in case of audit services. Okay, so this is known as a performance obligation. Now, how to determine the performance obligation? How to determine the performance obligation? So friends, let me take you on the Excel file, and now let's help you with the concept of the performance obligation. Concept of the performance obligation. A performance obligation is a distinct goods or service or a series of distinct goods or service which is substantially same and have the same pattern of transfer. I hope my Excel file is visible to all of you. Is it visible?
Yes, sir.
Visible, not
Yes.
visible? Visible. Should I enlarge it or is it okay?
Okay to see, sir.
Yes.
Fine.
So the question comes, and step number 2 is determine the performance obligation. How will I determine my performance obligation? Okay. For example, there are lot of time, the companies, the entities are transferring the bundle of goods or services, the package of goods and services. देखते हो ना आप, इलेक्ट्रॉनिक गुड्स परचेज करने जाओ, it comes with a warranty, it comes with a free service, it comes with a maintenance service in a lot of industries. Like it is very normal in case of electronic industry, automobile industry, very normal, है ना? After sale services, delivery plus sales plus after sale services, installation services. So last week I purchased 3 fans from Havells. मैंने Havells के 3 पंखे खरीदे, and it was a costly fan. So the shopkeeper, that Havells franchisee, told me that our company's people will come to your house to install the fan. Right. So I said, very good. So my wife was telling me that these people will come after 2 days. So why don't you get it installed from the mechanic, which is living nearby to our house? So I called my mechanic and he told that I will take 1,000 rupees for installation of 3 fans. Right. But Havells has given me free service of installation. Right. So of course that installation service has a cost. It has a price. And Havells has given me free installation. So they have sold me goods and they have given me free installation. And you know what they told? That we have a policy for the fan which has an MRP of more than 10,000 rupees, we are giving free installation. And for the fan which are up to 10,000 rupees of MRP, we are charging 250 rupees. Okay. For the costlier fans, they are providing free installation. And they have made a policy for what is costlier and what is not costlier. They have made a policy and a threshold of 10,000 rupees. So now the point is, when goods and services are considered as distinct, the point is whether, so what Havells is giving me? Havells is giving me fans. So they sold the fan. I picked the fan from the market, from that franchisee, from that showroom. I paid the money. I paid the full money and I got the fan. I picked in my car. Okay. I got the delivery of the fan immediately. After 2 days, that guy has come, that person has come and he has installed that fan in my house. So Havells is recognizing a revenue. Havells India Limited, a big Indian electronics company, listed company. They are recognizing a revenue. Now the question is whether these are 2 performance obligations for Havells or it is a 1 performance obligation.
There is 2 performance obligations.
Whether these goods and services are considered as distinct or not distinct. Delivery of fans and installation is considered as distinct or not distinct.
Distinct.
It's a distinct, sir. The service is installation is distinct and the goods are distinct.
Okay. Okay. And now I am giving you more spices to in this example. It is a specialized kind of a fan. Specialized, highly customized, very specialized. It cannot be installed by any party other than Havels. होता है ना, कंपनी फिटेड है, आप कोई प्रोडक्ट लेके जाओ, मैं वन प्लस का मेरा फोन था, वन प्लस फोन हैज गॉट सम प्रॉब्लम. I went to the nearby mechanic shop, right, in Karol Bagh, Gafar Market. It's a big market in Delhi for mobile phones. So I show it to 5-6 mechanics, to 5-6 repairing shop, mobile repairing shop. Everybody told me you have to take it to the company. You have to take it to the service center of company. We will not be able to correct this problem, fix this problem. So probably that product is highly customized, highly complex, that it cannot be repaired other than by the company. So elaborating my example, the fans are so complex and highly customized that in addition to Havels, nobody else can install those fans. Will your answer be different?
Yes, sir. Now it won't be a distinct product because services of installation is not readily available in the market.
Okay. Are you guys giving me answer by applying a logic or by reading, whatever is there on the screen, or
Sir, logic.
Already you have some idea about Ind AS 115? Yes, Anush.
Sir, logic, because services कोई और provide नहीं कर पाएगा. That is why we have to purchase service together with the fan. Therefore, it is not a distinct service.
So whatever logic,
Sir, and also you told that in the beginning of this class, the thing is that this Ind AS is a customer centric, customer specific. The users to be determined by the customer. In this case, particularly the highly configured and all these things, without which the customer cannot be used that product. So that this both will be combined and it will be treated as a single performance contract.
So now, Saminathan, I have a question. So whatever answer you have given, I have a question. So when I have elaborated my example, then everybody started saying, sir, then it will be a single performance obligation. But what happened in the last case? When I told you that I purchased I purchased 3 fan and Havels is also giving me installation service. And I called my mechanic and he was charging 1,000 rupees. But of course, I have got this service from Havels. Then why it was 2 performance obligation?
Sir, because at that point of time, service was easily available from the market, so we can purchase it also without taking the help of Havells installation service. We can use the fan. Therefore, 2 service obligation was there.
2 performance obligation. Okay. Yes. So Saminathan, do you have a different answer?
Yes, sir. I have the difference. That in that case also single performance only. The thing is that at the user level is that they can ready to use
without
it.
Installation, fan.
Yeah, without providing the installation service of the supplier, the end user can use that service on their own, or with the help of readily available resources. So that in that case also, after having the deep discussion, it will be treated as a single performance obligation.
So let's, whatever logic you guys have given, let's relate with the theory which is given in the standard, the provision which is given in the standard, and again I'll come back to the again with my both these examples. And Anushi, your answer is absolutely right. Your answer is absolutely right. Yes. Initially, it was 2 performance obligation. Now, when I've elaborated my example, it become 1 performance obligation. And let's, Saminathan, read with the provision of the standard. Okay. When goods and services are considered as distinct, so the performance, determine the performance obligation. What is a performance obligation? A performance obligation is a distinct goods or services. It's a different goods or services, right? And now the question comes, sir, when the goods and services will be considered as distinct? Condition number 1. First, you need to check at goods and services level itself. At goods and services level itself. So goods and services, goods and services, customer can get the benefit of the goods and services at their own or with the help of readily available resources. Or with the help of readily available resources. If customer can get the benefit of the goods and services at their own or with the help of readily available resources, then it will be considered as a distinct goods or services. Now, let me relate with the help of this theory. Let me relate my example with the help of his theory. As a customer, I have purchased 3 fans from Havells. Okay. I took the delivery of these 3 fans from Havells on 29th March 2025. In which financial year?
24-25.
24-25. The mechanic for installation came to my house on 2nd April 2025. In which financial year?
25-26.
25-26. I paid 35,000 rupees for 3 fan. I paid. Okay. मैंने पैसा दे दिया. I already paid. Now Havells, Saminathan is the CFO of Havells. He is the CFO of Havells. So he has to recognize the revenue. Question number 1, whether entire 35,000 revenue has to be recognized. Question number 1, or less than 35,000 has to be recognized, right? Question number 2. So Havells has, so Saminathan will ask his team member, please check. We have to deliver installation service. We have to deliver fan. Is it a 2 performance obligation or is it a 1 performance obligation? So the team member of Saminathan will check and he will answer, sir, we have seen that in Ind AS 115, it says that if customer can get the benefit of the goods and services at his own or with the help of readily available resources, then it will be considered as a separate performance obligation, distinct performance obligation. So, sir, the fan which we have provided to customer, right? It can be installed by the customer itself, like my father-in-law, right? Of course, my father-in-law is a businessman, but he can install the fan, lights, he can install himself, right? So whether the customer can get the benefit of those goods and services at their own, benefit कब मिलेगा? Fan को install करने के बाद ही तो मिलेगा, तभी तो पंखा चलेगा. So, or it can be, or the customer can get benefited with the help of readily available resources. Sir, अगर हम इंस्टॉलेशन नहीं भी करेंगे तो वो मैकेनिक को बुला के कर लेंगे, तो बड़ी सिंपल इंस्टॉलेशन है, राइट? सो इन दिस केस टेल मी whether the delivery of fan and delivery of installation service, is it a 2 performance obligation or 1 performance obligation?
A 2 performance obligation.
2 performance obligation. Why? Because the customer can get the benefit. The customer can get the benefit from that fan at their own or with the help of readily available resources. Correct? Or with the help of readily available resources. Is that right? Is that clear? But in my elaborated example, when I have said that the fans are highly customized, so complex, it cannot be installed by Havells. It cannot be installed by any party other than Havells. It can only be installed by the company. So then again, Saminathan is asking to his team member, we have already delivered the fans. Can we recognize revenue? So the team member will say that, sir, we have not delivered the performance obligation. We have not completed our performance obligation. So Saminathan is asking why. The team member is responding, sir, the customer will not be able to get the benefit of this fan till the time we will provide the installation service. So in this case, delivery of fan plus, okay, delivery of installation, right? It will be a single performance obligation or 2 performance obligation? Single performance obligation, right? And the Havells India Limited will recognize the revenue of even delivery of fans when the installation will get completed. Is that clear, Saminathan? Is that clear?
Yes, sir. The earlier case, no, that the installation service is readily available. The customer is used from the outsider. So I thought that it is since he is used that installation, from the supplier perspective, I decided that is a single. Even though it is two things, that is what my confusion. Now it is clarified. Yeah, thank you so much, sir.
Yeah. So friends, at times when we are purchasing electronic products, for example, just last month, I purchased washing machine. Okay. And it was a LG washing machine and the installation was free. Okay. So it was a festive season. So we purchased washing machine and the company told that due to heavy demands, our mechanic will be able to come only after a week from the date of purchase. My wife told me, what is there in the installation? Just we have to place this washing machine. We have to plug and play. I have to read the instruction. The instruction card is inside the washing machine. You have to read this instruction card and you can install the washing machine at your own. You can install the fridge at your own. You just plug and play. Or at times you read the instruction and you can just install at your own. Correct? So in that case, the LG company will not wait till the time of installation, right? They will recognize the revenue from the sale of washing machine, sale of fridge or refrigerator, the allocated revenue they can recognize when they deliver the goods. Okay. But had it been a highly customized product, without the installation, nobody else can do the installation other than the company. In that case, they have to wait till installation and they have to recognize the revenue only when the installation will get completed. Why? Because the customer will get the benefit only when the installation will get complete, and the customer cannot get the benefit. I mean to say, customer cannot install at their own or with the help of readily available resources in the market. Right? I hope this concept is clear to everyone. Very, 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 very important concept. Right? So friends, whether goods and services are distinct or not, you have to look at from two aspects. Aspect number one, at goods or services level. Aspect number two, at contract level. Okay. So at goods and services level, you understood with the help of example of fan, example of TV, example of fridge, example of washing machine. समझ गए आप? At contract level. Now, you need to also
the example we used, if we see step 1 and step 2, is like for the step 1, it would be considered as a single contract, but step 2, it would be considered as two obligations. Is that so?
What is step number 2? What is step 2?
Like determining the performance obligation. Like we have a 5-step one thing, right? Like the first thing is like determining the contract, and they did.
Okay. See,
so
it is not different, right? Step number 1 and according to step number 1 and step number 2, it is not different, right? So we are talking about performance obligation. Is it a 2 performance obligation or is it 1 performance obligation? So determination of performance obligation is always as per step number 2. Step number 1 only helps you whether it is 1 contract or 2 contract, right?
Yeah.
Performance obligation are the subset of a contract. वो contract का subset है, right? वो contract का subset है. It is not like that one contract has a 1 performance obligation. One contract could have 5 performance obligation. Or there could be a scenario when 2 contract will be combined. Why? Because both the contract put together is only giving you 1 performance obligation. And concept was same. You remember that sale of software and consultancy for customization of software. Yes. You remember that example?
Yes,
in contract one, there was a contract for sale of software. Okay. In contract 2, it was a consultancy services for customization of software, customization to make it usable for customer.
Yeah.
So the step number one, what step number was telling? Step number one was telling you
It's a
if
one
it is
contract.
negotiated as a single commercial package, if it is giving you single performance obligation. So tell me now, applying the logic which is given, provision which is given in step number two, what it says, the goods and services are considered as distinct if the customer can get the benefit at its own or with the help of readily available resources. So one who is selling the software, that company can only customize the software. Okay. So when the customer will get benefit, when the customer will get the software, or when the customer will get the customization service.
Customization service.
Customization service. So whether these two contracts are giving you two performance obligation, or whether these two contract put together is giving you single performance obligation.
When they put together, it's giving
single performance obligation, right?
Yes.
So what step number one says that? Step number one says that if multiple contract will give you single performance obligation, then both the contract has to be combined. You have to combine both the contract for the accounting purposes. Okay. Means the first contract was giving you a price of 10 lakh rupees. The second contract was giving you a price of 5 lakh rupees. So आपके लिए accounting के लिए the total price is 15 lakh rupees, right? And of course, it is a single performance obligation. You will recognize the entire 15 lakh rupees when you complete the customization service. Okay. Is that clear?
Yes, sir.
Okay. Now, when the goods and services are considered as distinct, there are two conditions which are given in the standard. Condition number one, you have to check at goods or services level. Condition number two, and the word is and, not or, the word is and. And you need to check at contract level also. You need to check at contract level also, right? The goods and services are separately identifiable in the contract. At contract level, the goods and services are separately identifiable in the contract. And the goods and services are considered as separately identified in the contract when there should not be a significant integration, there should not be a significant modification or customization, the activity should not be highly interdependent. Or I would say like this, the goods and services are not distinct. I would say the goods and services are not distinct when they are highly integrated, highly customized, highly modified, right? And when they are highly interdependent. For example, Sanjay has given a contract for the construction of house, right? Sanjay has given the contract for the construction of house. Whether this construction of house, it is highly integrated, it is highly customized, it is highly modified activity or not?
Yes, sir. It's a highly integrated, highly customized,
highly
modified.
integrated because you have to integrate the entire wiring of the house. You have to integrate the water line of the house. You have to integrate the wall, pillar. It's a highly complex kind of exercise. Yes, it's not a simple exercise, just like washing machine, just like software, just like the other thing, right? It's a highly integrated, highly customized. Okay. So if a contractor to whom you have given the contract, he has constructed, let's say 50-60% of your house. Okay. And he went to his village, वो अपने गांव चला गया, and he is not responding to your calls also. So will you be able to get the house complete? Probably answer is yes. So customer can get the benefit of those goods and services at their own. Of course, खुद तो नहीं बना सकते, or with the help of readily available resources. What you will do? You will give this contract to the another party. है ना?
Yes, sir. I will give
yes,
those.
But so at goods or services level, probably the customer can get the completion of this house from the other party at goods or services level. But at a contract level, whether this goods and services are distinct, whether the house 50% house is completed, whether this 50% house is a separate performance obligation and remaining 50% is a separate performance obligation, right? So probably at goods or services, probably your answer could be yes. But at a contract level, whether this entire house is distinct, whether this entire, so the activities within the house are distinct, answer is no. Why? It is not distinct because it is highly integrated, it is highly customized, modified, and it is highly interdependent, right? कि उसकी तार कहां से आई है, उसका उसने वाटर लेवल कहां छोड़ा है, उसने पाइप कहां डाला है, राइट? उसने पिलर कहां पे है इसका. It is highly customized, modified, integrated, interdependent activity. Yes or no?
Yes, sir.
Yes.
The goods and
So-
services are the subset
Yes.
of the contract level.
Yes. So at a goods or services level, probably it could be distinct, but at a contract level, it is not distinct. At a contract level, it is not distinct, and hence it will not be considered as a separate performance obligation. 50%, 60% completion of house is not a separate performance obligation. The intent of the customer is to have a house. The intent of the customer is not only having a room, or it is not having a row house. The intent of the customer is to have a complete house. Okay. So at times at a goods and services level, you will find that it is distinct, but at a contract level, it will not be distinct. So you have to look from both the level. So we'll discuss few more examples and you will be able to understand it very much. Examples. Reliance Digital Dealer sells a refrigerator. It also provides delivery services on the request of the customer. The customer may arrange delivery at their own as well. Tell me, whether sale of refrigerator or delivery of refrigerator, these are two separate performance obligation or these two are one performance obligation?
Separate.
This is a two performance obligation,
Two
sir.
performance obligation, PO1 and PO2. Performance obligation 1, performance obligation 2 means Reliance will recognize the sale of refrigerator when Reliance will deliver the refrigerator, right? Deliver the refrigerator. Reliance will recognize the revenue. For delivery of refrigerator, Reliance will recognize when the delivery will get completed. Amazon, you have purchased a refrigerator from Amazon, right? You have purchased, and when you purchased on 29th March 2025. You got a delivery on 7th April 2025. So you have purchased a refrigerator from Amazon, whether you are a customer, of course, whether the revenue from sale of refrigerator and the delivery of refrigerator, whether these are two separate performance obligation or single performance obligation.
Single.
Sir, this is a single performance, sir.
It is a single performance obligation. Why?
Because without the delivery of that refrigerator, the customer cannot use it actually.
And even the customer will not be able to get this refrigerator with its own available resources, you know.
Yes, sir.
And to your surprise and my surprise, let me tell you, 5-6 days back, I purchased a pen for my daughter. To my surprise, and it was from Amazon, that stationery item. And I'm living in Gurgaon, Delhi NCR. And that pen, that stationery item was delivered from one of the supplier in Mumbai, one of the warehouse in Mumbai, right? And Delhi is the market where these goods and services are getting supplied all across the country and outside the country.
It is a crazy, sir.
Right. So the point what I'm making here, when you are purchasing some goods and services from e-commerce industry, from e-commerce model, right? So their obligation will not be completed when they got the money and when you have booked the goods and services. When you have paid the price and you have booked the goods and services, you ordered the goods and services and the order number has generated, right? So the sale or the performance obligation is not completed. The performance obligation will only be completed when the delivery will happen. So their performance obligation will get completed when delivery will happen. So both sale of refrigerator and the delivery of refrigerator, this is the single performance obligation, right? So they will recognize the revenue when the delivery will complete it. So what happens if the goods and services will stolen or get damaged on the way? So it is your responsibility or Amazon responsibility?
Amazon responsibility.
Right? क्योंकि आपके पास तो पहुंचा ही नहीं ना. So it is a single performance obligation. So are you able to differentiate between the Reliance Digital sale, where the customer is reaching to the shop or showroom, and the customer is ordering from the e-commerce? Have you understood the difference between the performance obligation? Right? And it's a real life example. It is not a very highly integrated, modified and complex example. It's a real life example. Priya, Naman, Chitra, Prithviraj, Saurabh, Ankit, is that clear? Saminathan, is that clear?
Yes, sir.
Yes, sir. Very much clear, sir. You've given so much of examples, sir.
Yes.
It's very clear now.
Thank you. Flipkart. Now, let me make it more complex to make your guys' understanding more clearer. Flipkart. You heard about Flipkart?
Yes, sir.
Yes, sir.
Walmart
Yes, sir,
acquired a big stake in Flipkart. Okay. Yes. Flipkart is again an e-commerce. It's a competitor of Amazon. Like. So, Prithviraj had ordered computer from Flipkart. You know what he got? He got the parts for computers, right? So Flipkart is selling parts for computers. So he ordered a computer. What he got? He got a parts. And so there are 3 performance obligations associated with Flipkart. They have delivered the parts. They have sold the parts. First of all, sold the parts. Then they deliver the parts, and then the mechanic will come for assembling of the part, right? So he has purchased a Lenovo software, Lenovo computer, Lenovo laptop. Now he has paid the money, right? And Flipkart has sold, instead of laptop, he sold the parts for the computer or laptop. They have delivered to the customer, and now they will send the mechanic for assembling. Now question is whether the selling at the time when the customer has paid and they have sold, is it a separate performance obligation? Delivery is a separate performance obligation. Assembling is a separate performance obligation. Or selling and delivering is one performance obligation and assembling is another performance obligation. So is it PO1,
Yes.
PO2, PO3, or is it first 2 is PO1 and the last one is PO2?
Yes, the first 2 is PO1 and last one is PO2.
Sir, all
Sir,
are single
Sir,
obligations.
my thing is that the entire thing is a single performance obligation, sir.
Yes, sir.
Without
Single-
assembling the part, the customer cannot use that.
Okay.
But he can also get that assembled services from someone else.
Yes. So first of all, selling parts are not a performance obligation till the time it got delivered, right? Number 1. Number two, assembling. Whether goods and services can be assembled with the help of readily available resources, answer is yes. Probably answer is yes at a goods or services level. But at a contract level, what was the contract? The contract was to have a parts, or the contract was to have a laptop? What was the contract?
Laptop.
The contract
Laptop.
was to have a laptop, to have a computer, right? Whether this laptop or computer, right? The assembling of laptop or computer, is it highly integrated? It is highly interdependent. Screen, motherboard, wiring, speaker, right?
Yes,
Is it
sir.
highly integrated, customized, highly interdependent or not?
Yes,
Yes,
sir.
sir. It's
It is
interdependent.
Interdependent,
Integrated.
right? It is highly customized and modified. And the customer intent is not to have the parts, the intent is to have the laptop. So probably at a goods and services level, probably at a goods and services level, at goods and services level, probably this selling parts and delivery of parts, it is a one performance obligation. And probably it is a assembling of part is a second performance obligation. But at a contract level, you have to see from the contract level also. At a contract level, this entire obligation is a single performance obligation. So this will be considered as a single performance obligation. Flipkart will not recognize revenue till the time these parts will be assembled by the company. And so whenever you purchase a computer or laptop, your endeavor is to get it installed from the company only, so that your warranty will not be diluted. Yes or no?
Yes, sir.
So in this case, this selling, delivering and assembling, entire three will be considered as a performance obligation number one. Entire three will be considered as a performance obligation number one. Okay. Right? Is that clear?
Yes,
Yes.
sir. In previous example, Amazon also offer installation services. Then there are two performance obligation or a single performance obligation.
When Amazon will
Also offer installation service of refrigerator.
Amazon will also offer installation.
Yes, sir.
See, so basically what happens at a contract level, installation of refrigerator, washing machine, TV, even at a contract level, it is not highly customized. It is not highly integrated. आपको AC की इंस्टॉलेशन या टीवी की इंस्टॉलेशन या फ्रिज और वॉशिंग मशीन की इंस्टॉलेशन, आपको क्या लगता है कि जब आप इंस्टॉलेशन करते हो, आर यू चेंजिंग द पार्ट्स ऑफ दिस प्रोडक्ट ऑल्सो?
No, sir.
Just think about it with a real life example. But the assembling of computer and laptop, is it the same installation? Is it the same assembling in comparison to the installation of air condition, TV, washing machine, refrigerator? Yeah. So it is not
No.
same. It is not same. आप कराते कंपनी से ही हो, वो that is your intent. But what happened if the company will not come, if the mechanic will not come, will you be able to install your fan or not? Will you able to install your air condition or not? Will you able to start refrigerator at your own or not? Believe me, I have purchased 3 refrigerator in my life, but I never waited for the company person to come for installation. Every time it was free. Okay. Right? So that is why from the company perspective, there are 2 separate performance obligation. Delivery of goods is a separate performance obligation. Installation service is separate performance obligation. So sir, अगर आपने उसको बुलाया नहीं और वो आया नहीं, then when the company will recognize the revenue from the second performance obligation, which is installation. So after a reasonable point of time, let's say after 7 days or after 10 days, like that. Okay. तो वैसे करते हैं प्रैक्टिकली लाइफ में, वैसे करते हैं. और कई बार क्या करती हैं कंपनीज, लेट मी टेल यू, व्हाइल इट इज अ 2 परफॉर्मेंस ऑब्लिगेशन, बट फॉर ऑल दीज काइंड ऑफ गुड्स एंड सर्विसेज वो उसी टाइम पे रेवेन्यू रिकॉग्नाइज कर लेते हैं, इंस्टॉलेशन का भी प्रैक्टिकली. व्हाई? बिकॉज the customer can get the benefit of the goods and services at their own or with the help of readily available resources, and goods and services does not require a significant degree of integration, modification, customization, interdependency. Okay, तो practical life में वो तभी कर लेते हैं, but yes, it is a 2 separate performance obligation, right?
Okay, sir.
Is that clear or not clear? So Prithviraj, is that clear to you? Yeah. Friends, have you understood the meaning of at a goods and services level and at a contract level? Have you understood the meaning?
Yes, sir. Even at the sleeping time, if you ask the question, we will answer to your answer, sir. So much of examples.
Yeah. So all these are real life examples. All these are real life examples so that you will be able to appreciate. Right? घर भी आप अगर बीच में कोई छोड़ के चला जाए तो घर भी आप बनवा सकते हो दूसरे को बुला के. बट एट अ कॉन्ट्रैक्ट लेवल at a contract level, is it a separate performance obligation? Answer is no. Goods and services are not distinct at a contract level, because your outcome is to have a house from the contractor, not to have a partly constructed house, or not to have the rooms or only washrooms, right? Is to have a complete infrastructure. Okay, why? Because this entire activity is highly customized, integrated, modified, and interdependent also, right? Okay. Yes. Let's move further. Example. Now, more example. Software company is selling a excess software to a client. It also provides installation service. The installation service is a normal service, and this can be done by any software engineer. The software company also sells goods on a model where client can take only software, only installation, or both from the company. How many performance obligations are there in this case? Is it one or is it two?
Two.
Performance.
There are
Two.
There are
two,
two
sir.
performance obligations in this case, as both of the below condition are satisfied. Goods and services are distinct individually. Individually means at their own, है ना? वो सॉफ्टवेयर सर्विस सॉफ्टवेयर बेचा और सॉफ्टवेयर के साथ इंस्टॉलेशन सर्विस भी बेची, right? So goods and services are distinct at their own, and it is also distinct in the context of the contract also, right? Goods and services are distinct in the context of the contract as well, okay? Because it is a normal service. It is a normal service, okay? So it is also distinct in the context of the contract as well, okay? It is different in the context of the contract as well, right? Complex नहीं है ना, लिखा है ना normal service है, कोई भी कर सकता है, right? It is not highly integrated, highly significant, highly customized, integrated, modified, right? No. So in this case, for example, if the company has sold the software on 25th March, revenue is recognized on 25th March. If it has provided the installation service on 5th April, the revenue has to be recognized on 5th April. Means it is a separate performance obligation, two performance obligation. Okay. Second example, software company selling a excess software to a client. It also provides installation service. The installation service requires high degree of customization, and it is done by this company only, as this needs high amount of knowledge about this software as well. The client always buy the product and installation from this company only. How many performance obligations are there in this case?
Single performance obligation.
Single, sir.
Single. So sale of software on 25th March, installation service on 5th April. So when the revenue will be recognized?
Around 5th April.
On 5th April. It is a single performance obligation, and that performance obligation will deemed to be completed on 5th of April. So revenue for entire contract will be recognized on 5th of April. Friends, I hope you guys become a master on this performance obligation individually and in the context of the contract, right? You need to see from the perspective of individually goods and services at their own level and goods and services at a contract level, right? You need to look from that perspective. Okay, right? Is that clear? Is that clear?
Yes, sir. The way of teaching you are is look like the eating the favorite food.
Thank you. Thank you. Yeah. Is that correct? Is that complete? So friends, now it's 8:35. Let's have a 10 minutes break. Okay. And after that, we will solve some questions from ICAI study material, and we'll do more concept on this performance obligation, more concept, right? So let's meet at 8:45, 10 minutes break.
Okay, sir. Thank you, sir.
So friends, we discussed on the identification of performance obligation. Step number 1, you need to check from the goods and services level, which is individually and in the context of the contract, right? Whether these goods and services are distinct or not a distinct goods and services. Okay. So this example we have already covered. This part we have covered. Yes. Illustration number 10 of ICAI study material. A construction service company enters into a contract with a customer to build a water purification plant. The company is responsible for all aspects of the plant, including overall project management, engineering and design services, site preparation, physical construction of the plant, procurement of pumps and equipment for measuring and testing flow volumes, and water quality and the integration for all components. So what was the underlying goods and services? The underlying goods and services was to construct a water purification plant. To construct a water purification plant. Okay, right? And these were the kind of component of this water purification plant, that these all activities has to be done, and then the integration for all the components will lead to a water purification plant. Tell me whether the company has a single performance obligation or multiple performance obligation under the contract. Whether the company has a single performance obligation or multiple.
Single performance contract at the contract level as well as this goods and service level.
Single performance obligation. Okay, probably at a goods and services level, probably purchase of equipment could be different from supply of services. Okay, right? Because this construction company is supplying goods as well as it is providing service also, right? But at a contract level, it is having a single performance obligation because this entire activity is highly integrated, highly interdependent, highly modified and customized. Determining whether a goods or service represents a performance obligation on its own or is required to be aggregated with other goods or services can have a significant impact on the timing of revenue recognition. Okay. In order to determine how many performance obligations are present in the contract, the company applies the guidance above. While the customer may be able to benefit from each promised goods and services at its own or together with the other readily available resources. Like I told you ना कि अगर वो आधी कंस्ट्रक्शन करके चला गया तो आप आधी कंस्ट्रक्शन पूरी करा लोगे, but they do not appear to be separately identifiable within the context of the contract. That is, the promised goods and services are subject to significant high degree of integration and as a result will be treated as a single performance obligation. And this is also consistent with the view that the customer is primarily interested in acquiring a single asset, which is a water purification plant, rather than a collection of related component and the services. Okay, right? Is that clear? Is that clear? With the help of this explanation also, समझ आ गया? Yes.
Yes, sir.
मैंने आपको बताया था ना, you remember that 50% of the construction is completed, 50% is remaining. तो आप दूसरे कॉन्ट्रैक्टर को बुला के भी करा सकते हो, right? But what's your intent? Is to have a single house or it is to have a part construction from one party, part construction from another party? Is to have a single house, correct? Is to have a single house, complete house, and this entire activity is highly integrated, highly interdependent, right? Okay. Yes. So illustration number 11. An entity provides broadband service to its customer along with the voice call service. Broadband service, you understood? Broadband service and voice call service. Broadband service to use internet. Voice call service is for the purpose of calling. Customer buys modem from the entity. Modem you understood? वो होता है ना आपका modem होता है ना जिसमें एंटीना सा होता है. This is your modem. This is your broadband का modem जो होता है जिसमें ऐसे एंटीना होता है. Correct? So this is the modem. My drawing is very poor. Okay. So customer buys modem from the entity. However, customer can also get the connection from the entity and modem from any other vendor. So you can also buy, like I'm using the modem, right? So Airtel has given me that modem, right? But that modem has some problem, so I bought the modem from Nokia. Okay, and it is also coming from Ericsson. So Ericsson का भी modem आता है. So customer can also get the connection from entity and modem from any other vendor. Okay. The installation activity requires limited effort and the cost involved is almost insignificant. So installation is very simple kind of activity. It has various plans. Means installation is a very minute thing, very minute. Like I told you, for those washing machine and refrigerator, for those kind of entities, for TV, so the companies immediately recognize the entire revenue. Immediately recognize the entire revenue without waiting for the installation to happen, because their trend says that 50 to 60% these products are installed by the customer itself, right? In only 30 to 40% they are asking for the company's mechanic to install. Otherwise वो खुद ही कर लेते हैं install. Okay, so it has various plans where it provide either broadband services or voice call services or both, right? So this, if you look at this company is providing a broadband service, this company is providing a voice call service, this company is also providing a modem. That installation is insignificant, right? So how many performance obligation are there in the contract? कितने काम कितने हैं? Performance obligation बनेंगे या नहीं बनेंगे, that's a separate issue. But what are the performance obligation? How many we will discuss?
Sir, in this case, we have 3 performance obligations, sir.
Broadband, voice call, and modem, right? Now,
Yes, sir.
Now the question is whether those performance obligations under the contract are distinct or not distinct. Distinct or not distinct. So then what you will see? Whether customer can get the benefit either its own or with the help of readily available resources, right? So
Yes, sir.
For broadband and voice call services, so this broadband service is a separate service and voice call service is a separate service. These are separately identifiable, correct?
Yes, sir. At the contract level also, it's look like 3 separate performance obligations, sir.
Yes. So contract level also, it is not highly interdependent, highly integrated. Even you can off your broadband connection, data connection. Then even you will be able to make a call. Means voice call is nothing to do with the broadband service, right? And modem, or you can also purchase the modem either from the entity or from anyone else. Okay, because the installation is also insignificant. So these are the three kind of separate performance obligation: broadband, voice call, and modem. Okay. Yes. This we have already covered, plumbing example. Yes. Illustration number 15 of ICAI study material. Illustration number 15. Okay, let's do this illustration. Software company enters into a contract with a customer to provide a perpetual software license, installation service, and 2 years of post-contract customer support. What they are giving? So first of all, people, or instead of people, I should say students. A student misinterpret the performance obligation word. So there are 2 aspects. One, what are the performance obligation? And second aspect is how many performance obligation. Okay. So what are the performance obligation is different from how many performance obligation. Okay. For example, I will ask you what are the performance obligation for a Flipkart in case of sale of computer. You will say, sir, they are selling parts. So selling parts, delivering parts, and getting the assembling done. These are the 3. But these are the 3 performance obligation. But how many performance obligation? Is there 3 performance obligation? Then you need to check. What you need to check? Whether goods and services are distinct. Whether goods and services are distinct individually, means at a goods and services level or at a contract level. At a goods and services level or at a contract level. Okay, or at a contract level. So goods and services are distinct at a goods and services level, at its own level, individual level, when the customer can get the benefit either at its own or through the readily available resources. And goods and services are distinct at a contract level when the goods and services are not highly interdependent, it is not highly interrelated, it is not highly integrated, it is not highly customized or modified. Okay. Yes. So according to that, you will get an answer. Is it a 1 performance obligation, or is it a 2 performance obligation, or more than 2 performance obligation? So software company enters into a contract with a customer to provide a perpetual software license, installation services, and 2 years of post-contract customer support, unspecified future upgrades and telephone support. Unspecified future upgrades and telephone support, right? That is the post-contract customer support. Okay, license, installation, and 2 year of post-contract customer support. The installation service requires the entity to configure certain aspect of the software, but do not significantly modify the software. Okay. These services do not require specialized knowledge, and other sophisticated software technician could also perform similar services. The software does not require the upgrades and telephone support in order for it to remain functional. The entity sells the license, installation, and technical support separately as well. How many performance obligations are there in the contract?
3.
Sir, there are 3 performance obligations, sir.
Okay.
License, installation,
and the customer support. And the
customer support, including the telephonic support, that one.
So basically, the software license, the company is selling software license, and the company is also providing installation. The software license is not such that it requires a significant degree of integration, modification, customization, or interdependency, right? It is not such. Okay. And the installation can be provided by some sophisticated technician other than the company also. So it means these goods and services are distinct at an individual level as well as at a contract level, right? Software is separate performance obligation, installation is separate performance obligation. And these upgrades, these post-contract customer support, the upgrades in telephone support, it is not such that without this, the software cannot run. The only thing is the efficiency will become larger when you will have a regular support and upgrade. So in my mobile phone, 5 days back, a notification came that you can upgrade your mobile phone, software upgrade. I didn't do that. My mobile phone is also running fine. So that upgrade was regarding some screen resolution. So I haven't done that. And of course, OnePlus is providing me this technical support and upgrade free of cost, but I haven't done that. Still my phone is running. So it means these 3 are the separate performance obligation. Okay. And the customer can get the benefit from each of the performance obligations separately. Right. Okay. So these are the 3 separate performance obligation. Yes. Principal versus agent consideration. Now, friends, in this standard, the concept of principal and agent is also given. And why the concept of principal and agent is important, right? For example, Indigo Airline is selling tickets to Make My Trip. Okay. So have you bought the ticket from Make My Trip? Have you booked the airline ticket from Make My Trip?
Yes, sir. I have booked it.
So whether Make My Trip is in the business of flying or Make My Trip is facilitating the ticket of Indigo Airline?
The facilitating the ticket of Indigo Airline.
Make My Trip is a facilitator. Make My Trip. So who is the
Flipkart
principal in this case? Who is the principal in this case? Make My Trip or Indigo?
Indigo.
For Indigo.
So Make My Trip, whatever ticket Make My Trip is charging, Make My Trip is not earning from sale of ticket. Make My Trip is earning from the commission income which they are getting from Indigo Airlines, and Make My Trip is also charging a convenience fee from the customer. Yes or no?
Yes, sir.
Yes,
Yes, sir.
convenience fee, or they are using the portal using fees. So they are using an excess fee, convenience fee. So they are using some fee of 350 rupees, 300 rupees, right? Everybody started charging that fee. This is how Make My Trip is earning money. Okay. So they are acting as an agent. So the question is, for example, Make My Trip, for example, Priya has booked a ticket from Delhi to Mumbai from Make My Trip, and she has paid 10,000 rupees for ticket and 300 rupees for the convenience fee. The total amount is 10,300 she has paid. My question is whether Make My Trip will recognize a revenue of 10,300 or only 300?
Sir, only 300.
Sir, only 300, sir.
Only 300. Why not 10,300? So Make My Trip can recognize. So just hold on. So Make My Trip can recognize a revenue of 10,300 and can recognize a cost or expense of 10,000.
Sir, in this case, that they are not controlling the price and they are not running the business. He is only providing, he is acting as an agent. He is not doing the main activity.
Okay. So how can you say that they are acting as an agent? So what are the conditions? What are the criteria when you will be able to say that, okay, so it is not a principal, it is an agent? Because Make My Trip is arranging. They are arranging goods and services from other party to give it to the customer. They are not supplying, they are arranging, right? Number one. Number two, Make My Trip is not primarily responsible for fulfilling the promise. Indigo is not obligated that Make My Trip has booked the ticket from the customers, okay, or Make My Trip has booked the ticket of the customers. So if tomorrow the weather is not correct, the weather is not right, so probably the flight will get cancelled, right? It's Indigo who is responsible for fulfilling the promise. Make My Trip cannot assure the customer that listen, if you are buying a ticket from my portal, nothing doing, doesn't matter whether it's a Indo-Pakistan war, whether it's a closure of airspace, it's a weather issue, doesn't matter. You will reach Mumbai tomorrow by Indigo flight number 6E2318. Can Make My Trip say that?
No, sir, they cannot say.
Make My Trip is only arranger. Make My Trip is only arranging, right? Make My Trip is not responsible for fulfilling the promise, right? So who will fulfill the promise? One who is supplying the goods or service. Make My Trip does not have an inventory risk. Indigo is flying an aircraft which is having a seat of 220 inventory of seats. 220 inventory of seats. Okay. So whether Make My Trip has an inventory risk, probably if the seat will not full, only 100 passengers were there. So who is having a loss of another 120 seats, whether Make My Trip or Indigo?
Sir,
Indigo, sir.
So Make My Trip does not possess any inventory risk. Who has a discretion in establishing the prices? Who will establish price, Make My Trip or Indigo? Indigo, right? It's not like Make My Trip has a discretion of establishing prices. And good part for airline, just see the portal of any airline, you will find the same price. Portal of any company which is selling airline ticket. So day before yesterday, I was buying a ticket for my brother. Okay. And I have checked at Indigo website. The price was coming at 6,600. I have checked at Go Ibibo, Yatra, Make My Trip, Clear Trip. Everywhere the price is around 6,600 rupees. Everywhere. The only difference is few portals were charging extra convenience fee, few were charging less convenience fee. On few portal there were some promo codes, on few portal there were no promo code. That's the only difference. But otherwise, who has a discretion of establishing the price? Not the agent, principal. So to cut a long story short, this standard has determined the condition that who will be the principal, who will be the agent. Primarily, principal is a person who is supplying the goods and services. Agent is a person who is arranging the goods and services. And primarily, these are the indicator which says that an entity is considered as entities controlling the goods and services before it is transferred to the customer if that entity is primarily responsible for fulfilling the promise, if entity has an inventory risk, or entity has a discretion in establishing the prices. Okay, we understood this. Now I am giving you the second example. Make My Trip has purchased 500 tickets from Indigo for Delhi to Mumbai. So there was a World Cup in Ahmedabad, right? And the date was already announced. So Make My Trip knows that since it is a World Cup match in Ahmedabad, so all the sectors, all the flights which are reaching to Ahmedabad, so the prices will be like anything at that day. So Make My Trip has purchased 500 tickets in advance from Indigo, right? So in this case, tell me, who has carrying an inventory risk, whether Make My Trip or Indigo, for the perspective of 500 tickets?
Make My Trip, sir.
If Make My Trip will not be able to sold out any ticket, it is a loss for Make My Trip, not Indigo, right? Because Make My Trip has already picked in bulk. They have already purchased. Who is and who has a discretion in establishing prices?
Prices will be established by Make My Trip, sir.
Make My Trip. You know what these guys are doing? They are purchasing in bulk and accordingly they will establish their prices. They are selling to the corporates also. Okay. So for example, just let me complete. For example, at times, if everywhere the price is, let's say, 50,000 rupees and they have already purchased in advance at 10,000 rupees, so probably they will give a good discount to their customers. Okay. They will give a good discount. For example, they will sell it 47,000 rupees, 48,000 rupees. Okay. So I was traveling to Dubai 5 years back. So I was just exploring at so many portals. In one portal, I found a discount of 5,000 rupees. Why? And then I asked the reason from one of my friend who is in the tour and travel industry. He told that e-commerce company probably has made a bulk booking from the airline company and they have a risk of missing out. They have a risk of losing the inventory. So at times they are giving a more discount than what price is going on in the market at times. Okay. So whether Make My Trip is primarily responsible for fulfilling the promise, probably answer is no, right? So these are not the all indicator. These are not the all condition needs to be satisfied. These are only the indicator, right? So in this case, Make My Trip will be acting as a principal, not the agent. So whomsoever is an agent, he is collecting the money on the behalf of the principal, and that is why that amount should not be regarded. That amount should not be recognized as a revenue, but the amount which this agent is charging from the customer for facilitating the goods and services, that will be considered as a revenue. Okay, clear? Understood? So principal will recognize gross amount. Make My Trip will recognize 300 rupees of revenue. Indigo will recognize 10,000 rupees of revenue. Okay. Yes. Sir, what is the accounting entry? Accounting entry क्या होगी? Collect तो money Make My Trip ने 10,300 का किया. What is the accounting entry? Anusi, what is the accounting entry?
Bank account debit. It will be bank account will be debited with 10,300 to revenue 300 and to liability 10,000.
Very good. To liability 10,000 rupees. To liability towards Indigo 10,000 rupees. Yes. Okay. Now let's discuss illustration number 26.
In case Make My Trip purchase that ticket, then what will be the accounting entry?
In case Make My Trip purchase the trick, what will be the accounting entry? Okay. So at the time of purchases, what is the accounting entry at the time of purchases? These tickets will become an inventory for Make My Trip. Yes. So inventory, tickets inventory account debit to sundry creditors or to liability to Indigo, right? Then Indigo debit to bank. परचेज की एंट्री खत्म. Yeah. Then the sale entry, revenue entry. So this 10,000 rupees ticket, they have sold at 25,000 rupees because there was an event and they have sold it at a higher price. So bank account debit 25,000 rupees to revenue 25,000 rupees. And let's say 500 rupees is convenience fee also. So bank account debit 25,500 and to revenue 25,500. Okay.
Sir,
Yes,
it will be treated as purchase. The Make My Trip major business is facilitating the tickets.
So Make My Trip ordinary course of business is both. Arranging the tickets to the customer and also buying and selling the ticket also. आप जब arrange करते हो तो कैसे करते हो? There are two ways. Number one, you can book the ticket on behalf of the customer. You can book the ticket from airlines. Number two, you will purchase the ticket. अगर मान लो आपने purchase नहीं किया and if the airline will not have the tickets, how will you sell to the customer? For example, HDFC Bank. HDFC Bank is the customer of Make My Trip. ओके कॉर्पोरेट कस्टमर होते हैं ना इनके कॉर्पोरेट कस्टमर्स भी होते हैं ओके HDFC बैंक इज सेइंग आई नीड 5 टिकट्स फ्रॉम दिल्ली टू मुंबई ओके मेक माय ट्रिप is asking to Indigo I need 5 tickets. Indigo says my flight is running full, I cannot give you 5 tickets, right? So at times these companies also do the bulk buying also, right? So in November I was planning, so in not in November, in October, I was planning for Singapore last year. In Singapore in October, there was a Formula 1 race. You understood Formula 1 race? Yeah. So the prices were like anything and I was planning for my travel. So then I preponed to September, right? Why? Because the hotel prices was like anything in October, the flight prices was like anything. It was 3 times more than the price in October last year for flight and hotel was 3 times in comparison to the price of flight and hotel in the month of September. So I planned my travel in the month of September. So at times what happens, these companies, these e-commerce agent also do the bulk buying as well. What do you think? Amazon always facilitate the goods from the producer to the customer. At times Amazon also do the bulk buying. जैसे आपने देखा होगा बिग बिलियन डेज सेल आती है या कुछ प्रोडक्ट होते हैं जो स्पेसिफिक Amazon पे ही मिलते हैं. OnePlus initially was sold through Amazon only. OnePlus phones. After that, after few years they have opened their showrooms and their physical stores. But before that, it was dedicated sold through Amazon only. So their ordinary course of business is not only to arrange. They are arranging either by buying and selling, or they are arranging just through the facilitating also. Okay.
Okay, sir.
Yes. Let's discuss an illustration from ICAI study material. An entity negotiates with major airlines to purchase ticket at reduced rates, compared with the price of tickets sold directly by the airlines to the public. ये क्वेश्चन का आंसर पहले मिल चुका है आपको. The entity agrees to buy a specific number of tickets and will pay for those tickets even if it is not able to resell them. So entity buys this e-commerce agent or this e-commerce company agrees to buy a specific number of tickets, let's say 100 tickets, and will pay for those tickets even though the entity will not be able to sell the ticket. So who has an inventory risk? Whether this airline company or this entity?
Entity, sir.
Entity.
Okay. So for those tickets, entity has an inventory risk. The reduced rate paid by the entity for each ticket purchased is negotiated and agreed in advance. The entity determines the price at which the airline ticket will be sold to its customer. Who is determining the price? Whether the airline company or entity?
Entity, sir.
The entity sells the ticket and collect the consideration from customers, and when the tickets are sold, therefore there is no credits risk. So entity, these kind of business are happening in advanced model. So entity is collecting the consideration when the ticket are sold. The entity also assists the customer in resolving complaints with the service provided by the airlines. However, each airline is responsible for fulfilling obligations associated with the ticket. Of course, this obligation will be met by the airline company only, including remedies to a customer for dissatisfaction with the service. Determine whether the entity is a principal or an agent.
Sir, entity is on a principal, sir.
In this case, the entity is acting as a principal. Why? Because the entity has an inventory risk. The entity has a discretion in establishing the prices. And of course, entity is not the primarily fulfilling the promise, but it is helping them to fulfill the promise. For example, if the customer is dissatisfied, they are raising the claim with the airline company. This agent this entity is raising the complaint with the airline company, claim with the airline company. They are resolving complaints also. Okay. So this entity is acting as a principal, not as an agent. Okay. Then this is a simple illustration, just leave that. Right. Then comes to the right of return. What is this right of return? Okay. So friends, whether the right of return represent a separate performance obligation, let's say you went to buy what should I say, a sari. You went to buy a sari. So you went to buy a sari for your mother. You went to the sari shop and you wanted to gift her on her birthday. So you were looking for the saris and you were not able to finalize. So then one sari, you were concluding it that yes, my mother will be happy when she will look at this sari, but you are not sure. You are not sure about that. And after 5 days is your mom's birthday. So the shopkeeper told you that not to worry. You can pay for this sari. You can take this sari along with you, right? You can show this sari to your mother after 5 days on her birthday because you also want to keep this as a surprise. And if your mother will not like this sari, you can return this sari within 7 days. Okay. So from the date of purchase to within 7 days, you can return it. We have a return policy. You can return that and either you can get the refund or you can exchange. For example, on 26th of March, this company has sold the sari to the customer. And up to 3rd of April, the customer has a right to return this sari up to 3rd of April. Up to 3rd of April. The customer has a right to return this sari. My question to all of you, whether the revenue will be recognized for this sari on 26th of March for the year ended 31st March?
No, sir. They have right to return the goods until 3rd. They have to wait for it.
They have to wait for it. So when the goods are sold with a right of return, even though the money has been collected, the company will not recognize the revenue till the time that those goods and services are either approved by the customer or when the time will expired. Either when the goods and services are approved by the customer or when the time will expire. Correct? A customer, so for example, that customer has not returned to the company up to 3rd. This company has a policy up to 3rd. But the customer has not come to the company and returned this sari up to 3rd of April. So whether the company will entertain the refund? Answer is no. They have the policy up to 3rd and the company is not obligated and the customer has already lose the right to return after 3rd. Correct? Correct? So friends, in case of right of return, what should be the accounting in case of right of return? So let's discuss with the help of an example, and this is a study material example, right? This is an illustration from the study material also. Okay. So what is the illustration number? Let me find out. So I need to check. But this example, this illustration is there in the ICAI Board of Studies material. You can check that. A retailer has a stated policy that any product may be returned within 30 days. Within 30 days. Based on the past pattern, right? Based on the past pattern, 10% of the goods purchased are returned within the 30 days window. Within the 30 days window, right? 10% of the goods returned are returned. 10% of goods purchased are returned within the 30 days window. So whatever goods are sold, how many goods are returned? As an experience,
10%.
On 15th March 2025, the retailer enters into a new contract and sells 100 units costing rupees 20 per unit at a price of INR 30 per unit. Okay. So 100 units, this 15th March, the retailer enters into a new contract and sold out 100 units. What is the cost of goods sold? What is the cost? 20 rupees.
20 rupees.
What is the sale price?
30 rupees.
30 rupees.
What is the margin? What is the profit?
10 rupees.
10 rupees. And the customer and this entity has sold 100 unit. So what is the probability of return?
10%.
10% means 10 unit. The retailer is unable to assert that it is highly probable that a significant revenue reversal will not occur for the variable component, that is 10%, right? So what retailer is saying that highly probable, a significant revenue reversal will not occur for the variable component, that is the 10%. Means this 10% return may be there. This 10% return may be there. Okay. So how revenue needs to be recorded? The question is how revenue needs to be recorded. So let me take you on the Excel file and let me help you with the help of the accounting entry. Accounting entry in case of right of return. What is the entry when goods are sold? What is the entry? Tell me. 100 units are sold. Cash account debit or bank account debit on 15th of March. 100 multiplied by 30, 3,000 rupees. How much revenue I am going to recognize? I am going to recognize that revenue which I am highly sure that this revenue will not be reversed. So how much I am highly sure? I am highly sure about 90 units or 100 units?
90 units.
90
units, sir.
I am highly sure about 90 units. Okay. So cash account debit for 100 unit, 100 multiplied by 30, to revenue 90 multiplied by 30, 2700. This 300 rupees, 10 units multiplied by 30. To refund liability, I will recognize to refund liability up to 30 days. I will wait for actual return or I will wait for the time to expire. Yes, correct. First entry is clear to everyone? Yes or no?
Yes.
So this refund liability entry is a provision entry, no? Means we are just estimating.
So once I recognize a revenue, don't you think I have to recognize a cost of goods sold also by the matching principle? 30 रुपी तो आपने recognize कर लिया, 20 भी तो करना पड़ेगा, तभी profit 10 रुपी का आएगा. Yes?
Yes.
Yes, sir.
So what is my inventory which is getting credited? मेरी दुकान से इन्वेंट्री कितनी चली गई? How much of inventory has moved out from my place? 100 unit or 90 unit?
100 units.
100 unit inventory has moved out from my place. So two inventory, 100 multiplied by 20 or 100 multiplied by 30? The cost price is 20. My inventory, my value of inventory is 20 rupee, not 30 rupee. So two inventory, 2000 rupees. How much? 2000 rupees. 100 multiplied by 20. How many of you are clear on this entry? Two inventory. Everybody is clear?
Yes, sir.
Out of 100 unit, you have recognized a revenue of 90 units because you estimate that 10 unit will be returned. So whether cost of goods sold you will recognize for 100 unit or 90 unit?
90
if you have
unit.
recognized, going by the matching principle, if you have recognized a revenue of 90 unit, you have to recognize the cost of 90 unit. So what is my cost of sale debit? 90 multiplied by 20, 1800 rupees. So your asset has moved out by 2000 rupees. Your expense has been booked by 1800 rupees. What is this 200 rupees balancing figure? This balancing figure of 200 rupees 10 multiplied by 20, it represent right to recover asset. Like for 100
Receivable.
unit you have recognized, for 100 unit you have recognized a liability, you will recognize an asset also. What that asset? So till the time the customer will not approve, or till the time will not expire of 30 days, you have a liability towards the customer to return 300 rupees, and you have a right, you have an asset, you have a right from the customer to recover an asset worth 200 rupees. Is that clear? Is that clear? Yes or no? So how your balance sheet will look like? How your P&L will look like, first of all? How your P&L will look like? Your P&L will look like revenue. How much? 2700. And cost of goods sold. COGS, cost of goods sold. 1800. Profit. How much is the profit? 900. How your balance sheet will look like? How your balance sheet will look like? In your balance sheet, there is a refund liability. Refund liability. How much is the refund liability? 300. And
300.
your asset, right to recover asset. How much is the right to recover asset?
200.
Yes. Okay. And then of course your profit will transfer to retained earning, your cash will come, your bank account will be debited, your inventory will be credited, all those things will happen. But net, these are the final one. Now, what happened? What happened on 15th of April when the 30 days window has lapsed and no any customer has come for the return? Then what happened now? 30 days खत्म हो गए, 15th April को क्या करोगे आप?
We will recognize the remaining 10 units, sir.
We will
Revenue.
recognize the revenue of remaining 10 units. What you will do? You will debit your refund liability because you are not required to refund now. You will debit your refund liability, yes or no?
Yes,
And
sir.
you will also credit your right to recover asset. You will debit your refund liability by 300 and right to recover asset by 200. And you need to recognize revenue, to revenue. कितने से? 10 multiplied by 30, and you need to recognize cost of sales. 10 multiplied by 20, this entry will balance. Entry balance हो गई या नहीं हो गई?
Yes.
Yes. Refund liability debit, right to recover asset credit, cost of sales debit, and your revenue credit. Okay. This entity has balanced. This entity has balanced. Okay. So this is the accounting entry in case of right of return. In case of right of return, this is the accounting entry. This is the accounting entry. Okay. This is the accounting entry. Is that clear to you? Is that clear to all of you?
Yes, clear.
Yes, sir. Clear, sir.
Okay. Yes. Just a minute, guys. Yes. Yes. So, friends, in case of a right of return, this is how you will recognize your revenue. Okay. This right of return is not a separate performance obligation. So what you need to recognize as a revenue, the quantity which you are very much sure, the quantity which you are very much sure that it will not be reversed. Okay. And what happened if the customer is returned? What happened in that case? What is the entry? Let's say this is the entry when the nobody has returned. For example, scenario 1. Now scenario 2. What is my scenario 2? Anusi, what could be the scenario 2?
If customer returns to goods.
Entry after, entry when Entry when customer has returned the goods. Customer has returned the goods. Okay. So what will be the entry when customer has returned the goods? Refund liability. अगर रिटर्न होगा तो आप क्या करोगे?
Yeah, we
Refund
need to.
liability debit.
Yeah.
Refund liability debit. What
To
to?
bank
To
account.
bank. Very good. To bank. You will refund the money. And what you will collect? And what you will collect?
And the
Goods.
inventory also we will receive.
Inventory.
10
also.
unit.
Inventory also you will collect. You will refund the money of 300 rupees. And that right to recover asset was there. Correct? Right to recover asset was there. To right to recover asset. That was 200 rupees right to recover asset. To right to recover asset. And what will be debited? Now you have received the asset.
Inventory.
Inventory. Inventory will be debited. Inventory will be debited. Okay. So this is the accounting entry in case of actual receipt of goods and services, actual return of goods and services. Okay. I hope this is clear to all of you. Yes. So whenever there is a right to return, so the right to return is not a separate performance obligation. It is not a separate performance obligation. But when there is an option which is granting a material right, option which is giving you a material right for discount or for additional goods and services, then what will happen? For example, have you bought goods or services like garments, shirt, t-shirt, your clothes from any branded showroom? Have you purchased? Anyone?
Yes, sir.
From which brand?
Louis Philippe.
Louis Philippe, LP, right?
LP.
So, when I went to buy some shirts and t-shirts from LP, and they told me, if you do a shopping of 10,000 rupees, we will give you a voucher of 2,000 rupees. Okay. And you can redeem this voucher in your next purchases. सुना है आप लोगों ने? ऐसा
Yes,
सुना है?
sir. Yes,
Yeah.
sir.
Yes, sir.
You must have heard in many industries, in many companies, as a business model for retaining their customer, and why they're giving this voucher so that customer will return. Right? When you see this sale, 60% sale, 40% sale, additional voucher for the next for redeeming in the next purchases. So what is all these things? These all things are to trap the simple and humble customers. Okay. So, and I can share my real life example with all of you. I was in a market with my wife. Okay. And we were not in a mood to purchase any shop. We were not in a mood to any shopping. We were not in a mood of any purchasing, any shopping. Okay. And there is a woman apparel brand called Madame, right? So Madame is an expensive brand. So when we were into the market for the grocery shopping, she has seen that there was 70% sale on Madame brand. And believe me, our intention was not to shop. Our intention was not to do any shopping, right? There was no any event. So that 70% sale has killed me with 8,000 rupees immediately. Means when we see that when my wife show that 70% offer is there, 70% discount is there. So of course we have to pay 30%, and for those 30% we have paid 8,000 rupees, right? So the point is, all these companies are giving these sale, discount, vouchers. So what are all these things? These are just to attract and retain customers. Okay. So when you purchase from any outlet, from any store, that store is giving you a voucher so that you will use that voucher for the for the future purchases. And when you do the future purchases, you will do the future purchases, you have to come to the store again. You have to do the shopping. And of course, your shopping is not to the extent of the voucher only. Your shopping will be much more than that. When you will come to the store, the storekeeper, the salesman will show you a lot of things. Okay. And of course, out of 10 things he will show you, you will purchase 5-6 things. Okay. So these all are kind of a schemes. These are the techniques by which a customer can be retained or a customer can be attracted, right? So friends, now the question comes, for example, when Swaminathan has purchased 10,000 rupees of garments, 10,000 rupees of clothes from Louis Philippi, and Louis Philippi has given a voucher of rupees 2,000 for the future purchases. So in this case, whether there is a single performance obligation when the Louis Philippi is selling goods for 10,000 rupees and collecting 10,000 rupees from the customer, is it a single performance obligation or is it a two performance obligation?
Sir, two performance obligation is there.
What are the
One
two
selling
performance
the good,
obligation?
sir, one is selling the good and another liability is created for the future sale to give the discount.
Yes, you're absolutely right, Anushi. And I must appreciate you. Your fundamentals are very clear, right?
Thank you, sir.
Very clear. Yes. There are two obligations. Number one, right away, and don't mix it with the money collected. So money collection is a separate aspect, revenue recognition is a separate aspect. Okay. So this company has collected 10,000 rupees and this company has immediately sold garments worth 10,000 rupees. So selling goods immediately upfront is one performance obligation. At the same time, when this company has collected money and sold the garments, the company has also entered into a commitment for giving a discount or giving free goods worth rupees 2,000. Means tomorrow when the customer will come and the customer, let's say customer will buy the product of 2,000 rupees only. Customer will buy the product of 2,000 rupees only. In that case, the company will deliver goods worth of 2,000 rupees, but whether the company will collect any money subsequently, answer is no. The customer will redeem the voucher and the customer will collect the goods worth 2,000 rupees and company will deliver the goods worth 2,000 rupees. The company will record the cost of sales for 2,000 rupees, but the company will not have a revenue because money has not come. So it means, don't you think this is not a right accounting? Don't you think going by the matching principle, as I told you with that sale of car and service of car, going by the matching principle, if you are recognizing a cost, you are supposed to recognize a revenue also. Yeah. So don't you think by collecting 10,000 rupees, you have entered into a two performance obligation? Obligation number one, right away selling goods worth 10,000 rupees. Obligation number two, for giving a discount or selling goods worth 2,000 rupees free of cost up to a certain period of time, right? So friends, as mentioned by Anushi also, whenever there is options which is granting material right, and what is that material right? Let me tell you, whether the contract grant the customer the option to acquire additional goods or services, right? And whether that option provide a material right to the customer that it would not receive without entering into the contract. Means if Swaminathan would not have purchased the goods worth rupees 10,000, has he got the voucher for 2,000? Answer is no. So he has got the voucher only because he has entered into the contract of buying a goods worth 10,000 rupees. It's an implied contract, right? So friends, for example, there is a sale of 50% on the west side. There is a sale of 50% and that 50% is open to everyone. So in that case, for availing a discount of 50%, do I need to enter into a contract with the entity initially? Answer is no. Everybody, whomsoever will visit West Side store, they can get the discount of 50%. But if Company say that instead of 2,000 rupees, or let's say this 2,000 rupees was a discount. The company say that you have purchased a goods worth 10,000 rupees, and that is why we will give you a discount of 2,000 rupees on the next purchases. So for availing the discount of rupees 2,000 on the next purchases, can everybody will avail the discount of 2,000 rupees if that guy will not have purchased the goods of 10,000 rupees earlier? No?
No, sir.
No? So this 50% sale, whether it is availed by everybody, even without earlier buying the goods earlier as well? Yeah?
Yes, sir.
But this 2,000 rupees of discount voucher, so who will be able to avail this discount voucher of 2,000 rupees? Only those person who has purchased goods of 10,000 rupees from the entity initially. Correct? Is that clear? So friends,
Yes, sir.
standard says that if the option which is giving you a material right to discount or material right for additional goods and services, right? If it is without entering into the contract, right? If it is without entering into the contract, okay, in that case means you are not required to enter into a contract to avail this 50% discount. So this option is not a separate performance obligation. But when you have to enter into a contract to get some right, then it is considered as a separate performance obligation. And how the accounting will happen, let me tell you how the accounting will happen. So let me tell you, okay. Illustration number 23. With the help of this illustration from Board of Studies material, we will discuss this. We will discuss this aspect. Okay. And before this, let me discuss an example from my own example. Option of material right to discount. Are you able to see the Excel file?
Yes, sir. Visible, sir.
The customer, so what is the concept we discussed? The customer will be able to avail additional discount due to the fact that the customer has already entered into a contract by buying some goods and services earlier from the entity, correct? In this case, the additional discount, which this entity is expecting to provide in future purchases will be considered as a separate performance obligation. That additional part, additional one, okay? For example, you have entered into a contract with the entity to buy goods worth 10,000 rupees, and entity told that you will always get a 2,000 rupees of discount whenever you come for purchases. The sale of 50% was going on. You have purchased a goods worth 15,000 of rupees. So any customer who will purchase the goods worth 15,000 of rupees, how much they need to pay if 50% sale is going on?
7,500.
7,500 rupees. But this customer who has earlier purchased 10,000 rupees of goods and got a discount voucher of 2,000 rupees, right? How much this customer will get?
5,500.
So this customer has to pay 5,500. This customer has to pay 5,500 rupees. Okay, 5,500 rupees. So friends, so how much additional discount this customer has got by entering into some contract earlier? How much additional discount this customer has got?
2,000 rupees.
In comparison to other customer, 2,000 rupees. So everybody got 7,500 rupees discount. This customer got 9,500 rupees of discount. So 2,000 rupees extra discount. So this extra, this additional discount will be considered as a separate performance obligation. Is this clear to everyone? Is this clear to everyone? The
Yes,
option which gives you additional right, the option which will give you additional right to acquire additional goods and services. Okay? ये आपको याद रहेगा हमेशा इस एग्जाम्पल में. Okay. Now let's discuss an example. Vistara Airline sold a ticket to a customer from Delhi to Mumbai for rupees 15,000 on 1st March 2024. The company has given 2,000 reward points on such purchases, and customer can use these reward points in future booking. Have you heard about reward point, loyalty point? Have you heard about the concept of reward point and loyalty points?
Yes, sir.
Yeah. Okay. The fair value of each reward point is rupees 1. The fair value of each reward point is rupees 1. So by selling a ticket of 15,000 rupees, what Vistara is giving to the customer? Vistara is giving a Delhi to Mumbai ticket for 15,000 rupees. And what Vistara is also giving? Vistara is giving a right to get a ticket in the future worth 2,000 rupees or a discount of 2,000 rupees. And what is the value of this? What is the value of these 2,000 reward points? 1 rupee. That is why 2,000 rupees. Discuss how many performance obligations are there in this case and what is the amount of revenue to be recognized, and also suggest accounting entries. How many performance obligations are there?
The 2 performance obligations.
2
Delhi
PO
to
are there,
Mumbai
sir.
ticket and reward points to be used against future purchases. How much? So what is the standalone selling price of these 2 performance obligations? 15,000 for the current ticket and 2,000 for reward points. But how much money you have collected? What is the transaction price?
15,000.
So how much revenue will recognize upfront? 15,000 multiplied by 15,000 divided by 17,000.
17,000.
You understood this concept, na?
Yes, sir. This is what
Helicopter
provided in the helicopter view.
Yes. Whether this allocation of transaction price is clear to all of you? When this entity has sold the ticket, Delhi to Mumbai, this is what this is recognizing a revenue. Yeah. What is the accounting entry? Bank account debit 15,000. Revenue from performance obligation 1, 13,235, and to reward point liability 1765. Is this clear to everyone? Is this clear to everyone? Yes. You can see for 15,000 we have recognized a revenue of 13,235, means how much discount we have given in this performance obligation? 1765. And for 2,000 rupees of ticket which this entity will give in future, what is the liability we have recognized? 1765. So there is a discount of 235. This is clear ना? वो 2,000 रुपए का जो additional है वो क्या है? वो discount है which has to be allocated between these 2 performance obligation. Yes?
Yes, sir.
Okay. The customer has availed these reward points while purchasing a ticket from Delhi to Chandigarh in April 24. The customer has paid the balance in cash for 500 rupees. For 500 rupees. So customer ने दिल्ली से चंडीगढ़ की टिकट बुक कराई और कस्टमर ने रिवार्ड पॉइंट यूज किया और 500 रुपीज एक्स्ट्रा पे किया. So what is the accounting entry? Bank account debit 500, reward point liability debit 1765, to revenue 2265. Is this entry clear to everyone? Is this entry clear to everyone? सबको समझ आ गया? सबको clear है? Yes. Okay.
Yes, sir. Clear, sir.
Assuming the customer has not availed the reward point and it got expired in March 25. Assuming. What will happen then?
Yeah, we will recognize as a revenue, sir.
Simple. Reward point liability debit to revenue. Reward point liability debit to revenue. Simple. Okay. So whether this entry is clear to everyone? Yes.
Yes, sir.
Now let me discuss illustration number 23 from ICAI study material. Friends, how many illustrations we have covered from ICAI study material so far?
I think more than 20, I believe.
From ICAI study material, almost we have covered 17 to 18 illustration up to this level. Right. And my own illustration are separate. My own examples are separate. So you can see the gravity of the examples, illustration to help you guys understood the concept. Okay. In these classes. Illustration 23. An entity enters into a contract for sale of the product A for rupees 1,000. Okay. Product A 1,000. As part of the contract, the entity gives the customer a 40% discount voucher for any future purchases up to 1,000 rupees in the next 30 days. Clear? What is the discount voucher? 40% discount voucher, but the maximum value is 1000 rupees. The entity intends to offer a 10% discount on all sales during the next 30 days as part of a seasonal promotion. The 10% discount cannot be used in addition to the 40% discount voucher. Okay. So the total discount this customer can use is only 40%. The 10% can be used by anyone. And this customer cannot use this 10% in addition to 40%. So what is the additional right this customer is getting by entering into a contract of this 1000 rupees of product A?
40%? 30%?
What about others? Yes. What about others? 30%, you are right. So even without entering into the contract, everybody is getting 10% discount. If they will come for the first time, they will get the 10% discount as a part of the seasonal promotion. But this customer will get 40% discount. Why? Because he has already entered into a contract for purchasing a goods worth 1000 rupees. So that is why this customer will get an additional discount of 30%, right? So what will be my next performance obligation? What is my separate performance obligation? The additional option which is giving me additional right. So 30% will be the additional right. 30% will be the additional performance obligation, not the 40%. Now it says that the entity believes there is a 80% likelihood that a customer will redeem the voucher, and on an average a customer will purchase 500 rupees of additional products. So likelihood, what is the likelihood? 80%. And on an average, what is the amount which the customer will purchase? 500, right? And what is the likelihood? 80%. So 500 multiplied by 80%. What is that number?
400.
400. And what is the additional right to discount? What is the additional right of discount?
30%.
30%. What is the 30% of 400?
120.
120, sir.
So what this entity, when this entity is selling a goods for 1000 rupees and giving a 40% discount, so what is the additional discount this entity is committing? And what this entity is expecting, that how much of the additional discount this entity has to give to this customer? So on an average, potential purchase is 500 rupees potential sale. 80% is the probability and 30% is the additional discount. 30% is the additional discount because 10% will get by everybody. So 500 multiplied by 80% multiplied by 30. It will give you 120. So determine how many performance obligation does this entity have and what is their standalone selling price and allocated transaction price. 3 questions this question is asking. Let me again take you on the Excel file. Friends, how many performance obligations are there? There are 2 performance obligations. Sale of product A and discount voucher. What is the value? What is the standalone selling price? What is the standalone selling price of product A? What is the standalone selling price of product A? 1000 rupees.
1000.
What is the value of discount voucher? Expected value.
120.
What is the total standalone selling price? 1120. What is the transaction price? कितने में बेचा आपने? 1000 rupees. So what is my allocated transaction price? 1000 multiplied by 1000 divided by 1120. 1000 multiplied by 120 divided by 1120. Total revenue should not be more than the transaction price. Total revenue to 1000 rupees ka hi hoga. So at the time of current sales, what is the accounting entry? Cash account debit to revenue from product A to liability relating to future discount. 107 rupee, right? At the time when discount is expired, then liability to revenue. Same customer will come for availing the discount and buy goods worth rupees 500. Then liability relating to discount 107. Cash account debit 300. 300 ही होगा ना, because discount तो 40% मिलेगा ना. Are you getting me? This cash account will be 300 or 393? डिस्काउंट कितना है? व्हाट इज द टोटल डिस्काउंट? 40%.
40%.
भाई टोटल जो डिस्काउंट वाउचर है वो कितने का है? 40%. So if a customer is purchasing, this customer who is having this additional discount, if this customer is purchasing a goods worth 500 rupees, how much discount he will get?
200 rupees.
200 rupees, 40% of 500. So how much money this customer has to pay?
300.
300. So how much money this entity will collect? 300 rupees. So cash account debit 300 rupees. And what is the liability relating to this future obligation was there? 107 rupees. So what is the revenue? 407 rupees. 407 रुपये का ही रेवेन्यू होगा ना. वैसे भी मान लो ये नहीं होता, 10% का ही डिस्काउंट होता, कोई रेंडम सेल होती, कोई कस्टमर आता and discount is 10% only and the customer buy the goods worth 500, will you recognize revenue for 450 or 500? अगर 10% का डिस्काउंट है
450, sir.
so bank cash account debit 450 to revenue 450. So whether this entry is clear to everyone, whether this option of granting material right to discount is clear to everyone, and what is my material right of discount? My material right of discount is equal to incremental discount, right? 30%. What is the value of discount voucher? Expected purchase multiply by likelihood multiply by material right of discount, which is 120. Is this clear to everyone? Yes or no? Please tell me. Is it clear or clear? Is it clear in mind or clear from mind? Please confirm.
Clear in mind.
Clearing in mind.
Okay, clear in mind. Very good. Right? So friends, we have covered the agent versus principal concept. We have covered right of return concept. We have covered option of granting material right to acquire additional goods and services to acquire additional goods and services or to get a more discount by entering into an existing contract with the customer, with the entity. Okay. So this is what it is given here. Okay. Right. So friends, are you clear? Whatever I have explained today, are you clear on that?
Very much clear, sir. Thank you, sir.
Do you
It's clear.
expect? So do you want me to cover more concept today or we'll take it to the next class?
We will take it to next class, sir.
Okay, otherwise it will be overdose, right? Okay. So student, please do one thing for class number 1 and class number 2, right? Up to the step number 2, identify the contract with the customer and determine the performance obligation. Please solve all the questions from ICAI study material. 80% of the questions I have already covered. The remaining 20% please solve. Okay. Or please revise. Before coming into the next class, in the next 2 days, please do that. You have 3 days. You have today, tomorrow, and day after tomorrow. We'll meet on Tuesday, right? Okay. Thank you so much, and wish you a happy festival. Wish you a happy Raksha Bandhan. So all the sisters here and all those who are here. So please extend my warm wishes to your sisters also, right? And all the girls, all the females, all the ladies who are there in this class. So happy Raksha Bandhan to all of you. Thank you so much. Bye-bye. Take care. Have a good day.
Thank you, sir. Have a wonderful day.
हाँ अशोक जी, सेशन ओवर.